A very good afternoon to all the students. I welcome you all to today's Business, Economics and Business Environment Marathon. In today's marathon, we will be covering the full syllabus in the next few hours. So your job is to be there with me till the very end, and I guarantee you this that after this marathon, you will get complete confidence in your subject, and you will see that almost all the questions will come from this marathon only because we are going to cover the full study material. Now with me, I'm going to first tell you which all particular books I'm going to refer. I'm going to refer a chart book which is a full summary, visual summary of your ICSI study material. I also have the ICSI study material with me, and we will be going chapter wise. Clear now? How I can get the chart book? This chart book I will be sharing in the WhatsApp group. So you can join the WhatsApp group. The link is in the description of the video. You will get this chart book completely free of cost, and a full syllabus can be covered from the chart book itself. So without further ado, do share this with your friends. Do hit the like button because once we start, we'll complete the full marathon. Okay, so can I have a GTG in the chat box? Can I have GTG in the chat box? Sarvind, great to have you. What about others? Okay, great. Okay, so we will be covering the full syllabus. Your job is just to be with me. One by one, we'll complete all the chapters. I will give you the important MCQs, important topics, and you will see that the full syllabus is really getting covered. So are we good to go? Yes or no? Can I have GTG in the chat box? GTG in the chat box. Great. Great. So let's begin. Okay, so let's start. Hi, we start with the business communication business economics marathon. Now, the first chapter we will be covering, you have a total of 8 chapters. This is your 8 chapters in your syllabus. All the 8 chapters we will be covering today one by one. Okay, so first chapter we will be starting is your business demand and supply. Okay, demand, supply and forms of competition. Second chapter we will cover is national income. Okay, is national income. So let's start. First, this is your module lesson number 1 and we begin. Okay, so I'll cover from your main study material. Okay, so we'll be covering from there. Okay, let's start. Hi, we start with your lesson 1, that is your basics of demand and supply. Now first, when we start, what do you mean by the term demand? If I tell you demand, what is demand? So demand literally means when you go in the shop and you tell that I want a mobile phone. So what is it? First you need to have money. You need to have money. Second, there has to be willingness to spend. Willingness to spend. What does it mean? Just if I have money but I'm not ready to spend, it will not constitute demand. For demand, we are talking of a real demand. Let's say if a child is demanding, I want a plane. Is it a demand? Answer is no. Demand means you should have the money. You should be ready to spend. Okay, and you should have the desire that you want to buy. All of this will make a demand. So can I say only real demand in economics should be counted? If I am demanding go and get me the moon, it is not coming in demand. We are talking of demand which is in shops. When you go in the market and you demand that take this money and give me these goods, so that is a demand. Now there is a law of demand. Okay, there is a law of demand. Now what is law of demand? Forget everything. This you need to know and understand business. So what is law of demand saying? That very simple, if I reduce the price, let's say Apple phone has reduced by 20,000 rupees the price, what will happen? The demand will increase. That is why you will see that whenever there is a sale, the prices drop and automatically many people come inside and start buying. So this is a simple observation that other things remaining equal. That means everything else same. This is called as ceteris paribus. What does ceteris paribus mean? Means in economics they are saying that everything else remaining constant, only price has reduced. So what will happen to the demand? It will increase. Logically, there is no two minds about it, and that is why it is called as demand is a function of price. What do they call it as? Demand is a function of price. When I say means what? It is affected by price. It is affected by price. That if price goes down, demand will go up, and vice versa. If I increase the prices, let's say today prices have increased of goods, of petrol, what will happen? People start demanding less because it's more expensive. So this we will look it in the form of a graph. Now pay attention to this. Here what are we doing? Prices. Slowly what we are doing, we are taking example that 80, 70, 60, what is happening to the price of a goods? So we are reducing the price. So when we reduce the price, can I say you will also see that the quantity demanded will increase? So when the quantity demanded, what is happening? It is increasing. So let's take an example. At 80 rupees, nobody is demanding. But as I reduce it to 70, 200 people are ready to buy. If I reduce it to 60, more people are ready to buy. If I reduce it to 50, more people are ready to buy. So simple line, if I say, as the price is falling, quantity demanded is increasing. It's very simple. I don't think anyone will disagree. Now let's look at it at the graph, because here we will understand something called as demand curve. What are we understanding? Demand curve. It's called as D dash. Okay. Now pay attention. What we said, it was logical. On this axis, we will have the price. And on this axis, we will have the quantity demanded. Okay. Quantity demanded. Logically, you tell me whether you understood or not. At 80 rupees, at 80, price at 80, nobody is demanding, very expensive. So what is the demand? 0. Now as I reduce the price, I reduce it from 80 to 60, what will happen? Demand will increase. So here this is the demand. If I reduce it further, the price, I reduce it to 40. So what happened to the demand? It increased to 800. If I reduce it further to 20, what is happening? It is further creating this demand. If I reduce it to 10, what will happen? This will be the demand, right? So as price is going down, quantity is going up. This is the simple law of demand. And when you look at this action, it's very simple, that price here, that means quantity demanded will be here. This is the entire thing. Now we will look at the characteristics of the demand curve. Now you saw this D dash. It is called as demand curve. What it is called? Demand curve. What is happening to the demand curve? See and tell me what you can look at this line. When you look at this line, what is happening? This line. Can I say it is sloping? It is sloping from left to right. Very, very important. So this is an important MCQ. This is an important point that you have to keep in mind. That demand curve slopes from left to right. Now, assumptions of law of demand. Obviously, we had done one line which was called as ceteris paribus. Very important. That other things should not change. Okay. So assumption means that nothing changes. Consumer preference does not change. Fashion, everything, price of other goods, every other thing is same. Only what is changing? Price is going down. I'll give you an example. Why this ceteris paribus is important. Imagine price went down. Let's take an example of COVID. all of us had experienced COVID. Price went down, even people's income had gone down, income had also gone down. So still we saw demand was less only. Why? Because other things were not same. So to really understand the law of demand, it's an assumption that everything in the market will remain same, whether it be the choice of customers, consumer preference, fashion, prices of other, every other thing will remain exactly same, government policy, weather condition, everything will remain same, only price will change. Now I'm going to talk about exceptions. Very, very, very important is exceptions to the law of demand. Sir, what is exception? Normally, what I told you, when price is reduced, quantity demanded will also reduce. But here it doesn't happen. Price is reducing, quantity demanded is also reducing. Or other way, right, price is increasing and quantity demanded is also increasing. This is called as exception, where the law of demand is not applicable, where the law of demand is not happening. So one of the example is called as Giffin's good. One example is called as Giffin's good, or also called as inferior goods. Inferior goods. Now I'll tell you the story. What happened? This guy was there called as Sir Robert Giffin. What was his name? Sir Robert Giffin. He was there in UK and he realized that as price of bread, what was the product he had taken? Bread, wheat and rice. So he saw that as price of bread fell, people also started demanding it less. Demand also fell. Why? Because people thought that now it is a very inferior goods we don't want. I'll give you a very real life example. Tata Nano, when it was introduced, it was at a very low cost, but people didn't want to buy only. Why? Because people think that no, it is not good. My brand will not be nice. Other things, very cheap products also people don't buy because they feel that something is wrong. This is called as Giffin's good. That some goods are there in the market which, if you reduce the price, people will feel that it is not nice and we should not buy. These goods are called as Giffin's good. Why Giffin? Because Sir Robert Giffin had observed that price of bread was falling and demand was also falling. Second exception, items of snob appeal. Go and see politicians, go and see celebrities, go in Dubai and you will see that when the price is high, they want to buy it more. So demand also increases. Why? Because the item of snob appeal. Snob appeal means show off. People nowadays like to show off. Like I'll give you an example of some expensive car, Rolls Royce, Mercedes. People know it is expensive. iPhone, people know it is expensive, but still they buy because it is expensive to show off to others. Jewelry, if you go to see, diamond has no real use. What you will do of gold? Show off. Clothes, expensive clothes with a brand, what you will do? Show off. So when price is high, in that category the demand increases because people like to show off. Speculation. What is speculation? Is about future projection, about future. Let's say this was there in COVID. In COVID, what happened? There was shortage of food. So people used to, even when the prices of food went up, people were still demanding more because they were scared that there will be scarcity, there will not be any product, etc. Speculation could also come in shares, share market. Even today, Reliance shares is very high. People will still buy. Why? Because they feel that in future it will go more high. So this is about future expectation. Future expectation is speculation. Fourth is psychological bias, psychological illusion, that expensive products are more better. That is why you see that if any goods are coming from USA, people feel it is very good and they will demand more. If goods are coming from China, they feel that no matter how good it is a customer psychology that if it is coming from China, we will not demand. Okay, so we will not give a very high price. So this is all cases where opposite is happening from the law of demand. Now we come to law of supply. Now very important, law of supply. Now first thing I want you to write in law of supply, because only then you will understand. Law of supply is made from seller point of view. Seller point of view. Point of view. So think that you are the business owner. Okay, and then apply the law of supply. The seller point of view, this entire thing is made. If price is high, okay, let's say if we increase the prices, seller, what he will want to do? If you are a seller and market prices are high, would you want to sell more or less? Again, today you have a product, let's say you are selling this mobile phone. Okay, this mobile phone, I am a seller of the mobile phone. In market it is for 10,000. Now people are ready to pay 15,000. I will sell more or less? Obviously I will sell more. So supply will be more. So I will like to supply more. Now wherever the market price is high, people like to send outside India. They like to give to Dubai. They like to sell to foreigners. Why? Because they get more price. Other way around, if I reduce the prices in the market, seller will say I don't want to sell. I don't want to sell in loss. So who you have to think from? Seller point of view. What the seller will do? That is the law of supply. So what seller does? If prices are more, he will sell more. If prices are less, he will sell less. This is the line. What? If prices are more, he will sell more. Common sense, he like to get more profit. And vice versa. Vice versa means if the prices are less, he will sell less. Clear till here? Now same rule applies whenever we do law of supply, law of demand, ceteris paribus is there. That means everything else is same, only price is changing. So it means that everything else remains same. Same means constant. Only price changes. Price changes. Clear till here? Done. Same assumption as we said, ceteris paribus, that other things should remain same. That there should not be any change in government policy, consumer preference, no other thing except price. So price of other goods, competitors, okay, taxation policy, nothing else should change. Now coming to this point. Now this is called as the equilibrium price. What is it? Now let's look. Equilibrium price. This. Okay. What are we looking at? Equilibrium price. Now you tell me whether you will understand this diagram or no. Okay. Very important diagram from exam point of view. Now, what it is showing first. Let's understand this table, okay? Law of demand. If I take the demand curve. One second. First we will see the law of demand curve. This is the demand curve. How does the demand curve flow? From left to right. And here prices are given and here quantity demanded is given. Clear till here? Very simple. That means at high price demand will be this much, at low price demand will be more. Now coming to supply curve. What we are looking? We are looking at supply curve or law of supply. Can you tell me how is the curve's supply curve? How does it go? So I'll tell you. The supply curve looks something like this. Okay, supply curve. This is D dash. Sir, what does it mean? Now see, forget about the real thing. I'll explain the logic. You will never forget this again. What happens here? Here you will write the prices and here you will write the quantity supplied by seller. Quantity supplied by seller. What is happening here? If the prices are high, seller will supply more. Right? Seller will supply more. If the prices are low, seller will supply less. That is why it is shown in this thing. Now tell me, how is the supply curve flowing? Please write it down with me. The supply curve slopes. It goes upward. It goes upward from left to right. Concept here, it is upward sloping. It is upward sloping. Can you see this like this? So what is showing? The price is high, the person will sell this much. Concept clear, yes or no? Now look at the demand curve and the supply curve. Now both demand curve is like this, supply curve is like this. Now pay attention. Now combination we are doing, that is called as equilibrium price. Now what are we doing? We are doing equilibrium price. Equilibrium means what? It comes from the word equal. It comes from the word equal or same. Okay, it comes from the word equal or same. So now I will first make the demand curve. Now both I will draw in one line only. So demand curve is sloping from left to right, and supply curve is sloping from left to right upwards. So this point is called as equilibrium price. This point is called as where both are becoming equal, where both are touching. That is called as equilibrium price. And what is equilibrium price? At this price, in the market, this will be the prevalent price. So in market price will be this. Okay, now I'll explain the logic also. Very simple. Now pay attention to this. This is little complicated. It might sound complicated. Okay, now pay attention. What is happening at this price? Now this is the demand curve. This is the demand curve, and this is the supply curve. Okay, now pay attention how I'm teaching you. That if the price, here you put the price and here you put the quantity demanded / supplied. Okay, here I'll just put the word quantity. Okay, now pay attention. What is happening at this price? Demand is how much? This much. Very less demand. But can I say at high price the seller will be ready to sell more? Seller is ready to sell this much. What is happening? Demand is only this much, but the person is ready to sell this much. The logic is very simple, that at very high price, customer will not demand, but seller will be ready to sell more. So what will happen? This is a case of excess supply. It will be a case of excess supply, that people are ready to supply more. Demand will be less because the prices are very high. When I look at this scenario, this lower bracket, okay, now I'm looking at this scenario. Here what is happening? This is the price. So at this price, seller is not ready to sell. He is ready to sell only this much. This is the supply curve plotted here. But the demand is this much. So can I say this is the case of excess demand? This is the case of excess demand. So it is not matching only, because when high prices, seller is selling more but nobody is ready to buy. At low prices, customer is ready to ask more but seller is not ready to give. So we need some place where both of them are meeting. So this place is where quantity demanded and supplied is same. So at this point you will see quantity demanded and supplied is same. That means at this time there will be no excess supply or shortage. Supply or shortage. Concept clear? Yes or no? Right. Now we look at how they have given. See here. From here, from this table, can you tell me which is the equilibrium price? See, when the price is this much, what is happening? At this price, very high price, quantity demanded will be very less, customer will not demand much, but seller will be ready to sell a high. So therefore there is surplus in the market. At this price, demand increases, supply reduces. And if you go to see at extremely low price, customer will demand lot, but seller is not ready to sell much. So can you tell me from this graph, at which point, this they can ask you in the MCQ, which is the equilibrium price? 60, very good. So at 60, what happens? The quantity demanded and supplied is same. So how much ever demand is there, that much supply is there. Therefore, there is no surplus, no shortage. Clear? So we are done. Now we come to elasticity of demand. Now we are coming to something called as elasticity of demand. Now what does elasticity of demand mean? Okay. Now pay attention to this. First, law of demand. Okay. What does it say? That when the price is down, demand will be more. Elasticity talks about how much change is there, how much change, percentage change. Okay, so let's look at an example. That this I will call it as change in demand due to change in price. Okay, so very simple. If the change in price is 10%, I made the change in price of 10%. Quantity demanded change by 10%. This can happen. This is one case 1. Same proportionate change, same change. So this is how much? 1. 10 upon 10 is 1. Now if I tell you other thing, that price changed by 10% but quantity demanded changed by 20%. So we divided it's 2, that means it is changing more. This is second case. Now third, if I tell you it is changed by 5% quantity demanded, and this is the price has changed by 10%, this has not changed that much, it is less than 1 change, less than 1. Okay, and fourth, if I tell that price has changed 10% but quantity demanded has changed 0, no change. Okay, so this I will say it is 0. Now pay attention to this. All of this where there is the same amount of change, now pay attention to this, whenever the price brings about a proportionate exact same change in demand, what it is called? Unitary elastic. Clear? What does unitary elastic say? That same percentage change is there. If it is changing more, so can I say elasticity talking of reaction? If it is same, it is unitary elastic. If the reaction is more, it is called as relatively elastic. Right? If it is changing less than 1, then we'll say relatively inelastic. And if it is 0, now we'll talk of 2 cases where it is 0. Okay, 0 change. So fourth and fifth is basically a 10% change in price change by 10%. Quantity demanded change except infinite. Okay, so first infinite means unlimited change. So this is called as perfectly inelastic. Means it does not change only. Okay, the percentage. So for example, if the price of medicine has fallen, will you demand more medicine? Today medicine's price has reduced. Will you eat more medicine? The answer is no. The change in demand will not be there. And this is perfectly elastic. That a change in price, 10% price is bringing a infinite change, unlimited change. Now these are this is unrealistic, but they are just a example given. Clear till here? So unitary elastic, relatively inelastic, perfectly elastic, and perfectly inelastic. 5 situations are there. Clear till here? Okay. So how do? You figure out the percentage change. Okay, change in quantity upon change, quantity demanded upon change in price. Okay, so very simple. How do you find the change? If I want to see how much percentage change is there, so I will see how much change is at 2 rupees has changed on 10. So I will keep the original quantity down and the change only, and then we will calculate. Very simple. Types we have done: perfectly elastic, second is perfectly inelastic. Okay, as we saw all this. Perfectly elastic, how we will look at it, let's understand. Okay, so we are looking at perfectly elastic. Now, yeah. So perfectly elastic will do. That means if the price has gone from P to P dash, unlimited changes come. So that is why it is a. So always remember that it is parallel to the x-axis. It is parallel to the x-axis. Okay. So if a price is here, quantity demanded, let's say, is this much. Now if you change the price, unlimited demand is there. Unlimited, not stopping only. So it is parallel. Okay, it is parallel to the x-axis. To x-axis. To x-axis. Now we look at this perfectly inelastic. Now this is also very easy to understand the graph. First you see that this, it is parallel to which graph? To y-axis. Parallel means what? It is like this, and this is the y-axis. Okay, it looks like this. Now what does it mean? That if I change the from P, when P1 was the price, this was the quantity demanded. Now when the price has increased, quantity demand is still same. If I increase the price, quantity demanded is still same. If I increase the price further, quantity demanded is still same. So that means there is no change in demand. No change in demand. Clear till here? Now you need to understand that this is an example of what? Perfectly elastic or inelastic? This is perfectly elastic or inelastic? It is perfectly inelastic. Okay, so just look at this graph. When I show you this, the other one, this one, it is a case of perfectly elastic. Elastic. Clear till here? So note it down. So when it is straight line like this, okay, in that case it will be inelastic. Now we come to other things. Relatively elastic. Now this is relatively elastic. Now what does relatively elastic mean? That a change in price brings more change in demand. So there is greater change in demand. So let's say there is greater than 1. So let's see. It will be more flat. Okay. So from year to year. What does it mean? Very simple. Now you will see, make this graph, you will see. It is when the price is 50. Okay. Quantity demanded was this much, 100. See, from year till year we went 100 demand. Now what is happening? Price has increased from 50, it went to 60. So now when you put your quantity demanded as bigger arrow, so it is more change. So price has increased only this much small arrow, but quantity demanded has reduced by such a big percentage. So when we do this, it shows that it is elastic. That means small change in price will bring more change in demand. So change in price leads to bigger percentage of quantity demanded. So we just change this. So whenever the line is flatter, what is the rule? That whenever you're perfectly elastic, you go little, so the more flat shows more amount of change. Now we look at perfectly inelastic. Now relatively inelastic. Relatively inelastic demand. So relatively inelastic means it's not changing that much. That change in price leads to smaller percentage in quantity demanded. That price is changing big, but quantity demand is not changing much. So price has gone from 10 to 14. So such a big change, 40% change. But quantity demanded has just changed this much, small amount. So this will be more standing because more closer to the inelastic line. Okay, so here if we see, it's here the demand is this much. If we make a change here, only this much is changing. If we change here, so the change is so big here, but here it will change less. So price is changing more, price is changing so much, but quantity demanded will change less. Concept clear? And when you look at this line, you can make out only from here that it is unitary elastic. It is unitary elastic. What is unitary elastic? Exact change. So when the price was P, the quantity demanded was Q1. We made a change, we increase the price here, so quantity demanded will also increase same proportion. Okay, same proportion. So now I'll ask you, you have to tell me. Okay, now you have to tell me that this is what? This is what? Perfectly elastic, unlimited change. If I tell you this, it is a graph of perfectly inelastic. Now pay attention to this. If I take this and I say, what is this? Looks exact, right? It's not. So it is called as unitary elastic. Now if I take more standing, if I take it more flatter like this, so this is relatively elastic. Okay, and if I take it the other way around, that not that much sloping, it is more this side, then it will be relatively inelastic. Clear till here? So the graphs you need to know, important from exam point of view. Okay, now factors affecting price. Now what all affects the price? Common sense. Why there can be a bigger change? So due to, why does the demand change? Okay, so why demand could change? It could change due to price, it could change due to substitute changes, it could change due to your necessity, you need it more, etc. Heading due to habit, etc. Now we come to income elasticity of demand. Now what we did, so change in demand. Now pay attention to this. This is very important. Okay, very important. I want you to note it down also. Okay, that very important. That a change in demand could be due to price, or change in demand could be due to price, or it could be due to other factors. Other factors could be change, other factors could be, example, income change, or it could be a policy change, or it could be other goods, etc. So demand could change not only due to price. Let's say my competitor prices are changed, it will affect me. So when there is a change in price, change in demand due to price, it is called as contraction and expansion of supply. contraction and expansion. So we say that either, what is the correct word, that if price has reduced, demand has increased is not a right word, it is called as expanded. If I say price has reduced, quantity demanded has expanded. Other way around, if I say if price has gone up, quantity demanded has contracted. So this is the right word to say. Contraction means it has come down, expansion means it has gone up. Clear till here? The correct word to say increase and decrease is for other factors. So here we will use the word increase in demand and decrease in demand. Concept clear? Okay. So right word, when there is a change in demand due to price, we will use the word contraction and expansion. When the change in demand is due to other factors like income, etc., it is called as increase and decrease. Sir, why different names? Now someone is, why different name? It is same thing now. Answer is no. When you draw the demand curve now, you will see that there is a movement along the same demand curve. Here what happens? It is a movement on same demand curve. Demand curve. When it is other factors, it is movement. There is a shift in the demand curve. What happens? There is a shift in demand curve. A new demand curve is made. Okay, that is why it is called as increase and decrease, and here it is given a separate name. Concept clear? Very, very important. Now, we are talking about income elasticity. Okay, now we are talking about income elasticity. So this will come in what? Increase and decrease. What we will call it as increase and decrease. Increase and decrease. And in increase and decrease, it is, that means changes in demand is happening due to other reasons. Okay, due to other reasons. That is not price, not due to price. Like example, income. So we'll take the example of income elasticity. Now I'll give you a perfect example. Income elasticity. Now income elasticity we need to understand with respect of luxury goods, necessary goods, okay, and let's see which is the other one, and inferior goods, okay. Now what does income elasticity mean? So I will say a change in income. Now first we should write price. Now here the price is not changing. Income is changing. Person has become rich, salary has increased. So income increases normally. For each one it will be different. What happens to demand? So what happens to the demand? So this is called as income elasticity. Let's look. Now you tell me, for luxury goods, if your income increases, what will happen to demand? If you become very rich, will you buy poor clothes or you will buy expensive clothes, expensive jewelry? So the demand increases. For luxury goods, with an increase in income, demand also increases. Whenever it is in the same direction, it will be called as direct relationship. Direct or positive relationship. Common sense. Now let's talk about necessary goods. First, let's talk about inferior goods. Okay. As your income increases, what happens to your demand for inferior goods, poor goods? Your demand will reduce. So here we will say it has an inverse or negative relationship, opposite relationship. Clear till here? Now let's talk about necessary goods. Now we'll talk about necessary goods. For example, medicines. Or consumption of salt. salt. If your income has increased, what will happen to the demand of salt? What will happen to the demand of medicine? There will be no change. No change. Why? This is called as perfectly inelastic. It will be a case of perfectly inelastic, because necessary goods you will have to order only. If you become rich, you will not order more. If you become poor, you will not stop eating. So the demand will not change only. So that is it. We are done with income elasticity also. What does income elasticity say? That change in income, how much changes it brings in the demand. So first, for negative demand, okay, it is there for inferior goods. So we have done for inferior goods. When you become rich, your income increases, your demand less. So it has an inverse or negative relationship. Next, when we go, zero demand is for necessary goods. Necessary goods. So salt will not be taken more if you become rich. Then also I have given you for luxury goods also. Here they've said it is main unitary means same change. If we take the elasticity point of view, same change, more change, and less change. Okay, then the change in income. This same like elasticity. So here we are talking of change in income is bringing about how much change in demand. So if it becomes same change, then it is called as unitary. If it is bringing more change, then it is called as relatively elastic. If it brings less change, then it is called as relatively inelastic. Clear till here? That is what they have shown. Now we talk about another increase and decrease of demand, which is cross elasticity of demand. Now we look at cross elasticity of demand. Cross elasticity of demand. This is a contraction, expansion, or increase and decrease? Quickly tell me. Increase and decrease, because whenever price changes and demand changes, it is called as contraction and expansion. This is due to other goods. So what is the line that this is important, that quantity demanded changes due to other goods, due to the other goods in the market. So this is called as cross elasticity. Your demand is changing due to changes in demand of other goods. So we will now break this down also. Okay, so first we will take your cross elasticity of demand. First, let's see, for substitutes, unrelated, and complementary goods. Okay, so for substitutes, what will be the case? For unrelated goods, what will be the case? And third is for complementary goods. Okay, very simple. Let's understand. Now for this, to understand cross elasticity of demand, you need to write how I am writing. Only then you will be able to do, otherwise it is not impossible to understand. So what will happen, that when the price, now pay attention, price of substitute. Now we are taking an example of substitute means what? If not this, then I'll take the other goods, Pepsi, Coke. If the price of Pepsi falls, what will happen to quantity demanded of Pepsi? What will happen to the quantity demanded of Pepsi? It will increase. This is what quantity demanded of Pepsi. It will increase. So if you are dealing in Coke, what will happen to your demand? So understand that Pepsi's demand has increased. So because of that, my demand will reduce. So Coke demand will be reduced. So what is happening? If Pepsi is reducing the price, it will lead to loss of demand for the substitute, for their competitors. So this, they are talking of competitors. Okay. So this you need to see, that if Pepsi's price has fallen, quantity demanded of Coke will reduce. Concept clear? Very simple. Now unrelated goods. Now unrelated goods, what happens is not connection only. So if price of, let's say, lipstick has gone down, okay, quantity demanded of lipstick will increase. What will happen to the quantity demanded of cement? So they are unrelated. So it will be not affected, zero change. So in case of lipstick, we are talking of lipstick and cement, they are unrelated. So this will be, so this is direct relationship. Whenever they say direct means positive relationship, means they are moving in same direction. This is down, this is down. Okay. If we take unrelated, means it is perfectly inelastic. And now let's look at complementary goods. Complementary goods means what? Can you give me example? Petrol and car, bread and butter, bread and butter. Okay, so what you need with the other thing, what you have together. Okay, complementary goods. So now you need to see if the price of car goes down, what will happen to the demand of car? It will go up. What will happen because of the demand of car is more? What will happen to petrol? Petrol demand. Demand of petrol. What will happen? So for petrol, see what is happening. Price of car is reduced. Because of it, many cars are there in the market because more demand. So therefore, petrol demand will also increase. Okay. So how you have to look that when the price of car is going down, demand of car will increase, because of which petrol price demand will also increase because more car in the market. So can I say this is inverse, or whenever it is in the opposite direction, price and this inverse or negative relationship. Okay, now we look from the book. In cross elasticity, it will be 0 for unrelated goods. It will be negative for complementary goods. It will be negative for complementary goods. Okay, and for perfect substitutes, unlimited. If it is a perfect substitute, everyone will go here. So this will be unlimited demand. So it will be perfectly elastic because it's a perfect substitute, right? So people, example, water. Bisleri has increased its prices. We'll go to Aquafina. Okay, very simple. Now, going forward, increase and decrease and this I have explained. Increase and decrease in demand is due to changes is there due to other than price, and expansion and contraction is there due to changes in price. Okay, here you will see that there is a shift in the demand curve. Movement there is a shift in the demand curve, it is increase and decrease. Okay, and always remember that this, whenever in economics there is a rule that whenever the curve is on the right hand side, means right side signifies more and left side signifies less. That means if I can see from point A to point B, if this is the demand curve, okay, then what is happening to the demand? If it is moving on the right hand side, it is increasing. So right side means it has increased. So if the demand curve was here and now it is here, demand has increased. Okay, if I go other way around, decrease in demand. So at the same price, now if you go to see, logic is very simple. At this price, this was the quantity demanded. Now at the same price, the demand has increased. So there is a new demand curve. Okay, and vice versa. Understood? That at this price, this was the quantity demanded. Now the price is same. Other factors have increased. Salary, other goods. So because of the demand, this is the demand curve. This is a new demand curve. So what has happened? Demand has increased. So first this much was there. Now the New demand curve is made completely. Expansion, contraction, the movement is along the same demand curve. Okay, so this is, let's say if the original price is here, at this price, this is the quantity demanded. Now what is happening if I increase the price? Quantity will be reduced to this much. If I reduce the price, quantity will be increased to this much. So movement is on the same demand curve. So in contraction and expansion, movement is on same demand curve. Clear? Then comes forms of market competition. Very important. Let's see. Forms of market competition. Perfect competition. Perfect competition means what? There are many buyers, many sellers. All are selling same product, homogeneous product, same product. So I can't increase the price, I can't decrease the price, because it is one price will prevail. Okay, there is one price in the market, because in today it's a perfect competition. If one you are selling, someone else will sell another thing, same thing, and if he sells at lower price, it's so low price that you cannot go below that. If you go higher, you will lose all the customers. So that is a case of perfect competition. Okay, goods are homogeneous, same products are being sold, identical. Firms only have the motive of profit maximization. Everybody today is thinking about money and making more money. Anyone can enter in the market and exit the market. So in a perfect competition, you can enter in any business. Today it is perfect competition. You can enter into any business and close any business. Okay, and there is no concept of customer preference. Customer doesn't prefer this, that. All are equal because the products are the same. Now monopoly means one seller, he can raise the price as much as he wants. What does monopolistic competition mean? It is a combination of monopoly and perfect competition. Okay, there is a combo of monopoly and perfect competition. Okay, let's take here what happens. There are many buyers, many sellers in the market, so it is perfect competition. But every seller is selling with some unique features, that is called as product differentiation. What it is called? They are selling slightly innovative product. Okay, so they are selling slightly differentiated product, which is called as product differentiation. So maybe they might be having a, one person must be having a camera which is a little better, somebody is having toothpaste in which there is salt. So everybody is selling the same good, but you have some unique feature and you become you have monopoly in that single feature. Okay, so that is it. Now oligopoly. Oligopoly means, oli comes from the word few and poly means sellers. So it means there are few sellers in the market. Oligopoly means there are few sellers in the market. Monopoly, we all know, that means there is only one seller. Poly always means seller. Mono means one. Duo means what? Two players in the market. Two players. Perfect example of this is today airline industry. Airlines really has only two major players. Okay, who are the two major players? One is Indigo and the other one is Air India. Almost all the airlines have very limited player. There are duo means two players only in the market. Now elasticity of supply is same as when we did demand of supply. We saw the proportionate change, how much change is coming. Exact change is unitary, more change is called as relatively elastic, less change is called as relatively less elastic. So same thing from supply point of view. Okay, and we are done and we've completed the entire chapter. Thank you. Okay, so we are done and we've completed this entire chapter. Okay, now we will start with lesson number 2 is your national income chapter. We'll start with the national income chapter. We'll take a 5-10 minute break So what is the time? We'll take a 5-10 minute break and we will start. Okay, so we start by, let's say, 1:20 p.m. Okay, we will resume and we will complete this entire chapter. Till that, let me know in the chat box if everything is clear. Write the word clear in the chat box. So I know it is perfectly clear. Then we will start with national income chapter. Okay, national income. Darshini, great to have you. Dharanish, great. Sarvind, great. Okay. So now we will start in some time with the national income chapter. Okay, so we'll be starting with the next chapter, which is your national income. Before I start, can you give me a confirmation in the chat box whether I'm audible and visible? Yes or no? Arvind, great to have you. Saravind. Okay, in the chat box, can you put audible, visible quickly so I can start and complete? So now we'll be starting and completing your entire chapter called as national income. Okay, let's begin. Hi, so we begin with lesson 2, which is your national income accounting related concepts. First of all, what is the meaning of the term national income? So it is the total income of the nation. So national income means the total income of a nation. Now, how do I find the total income? So if I have to see the total income of nation, I have to see how many goods and services have been sold. Have been sold. Simple. Finish. How many ever goods? So think from a business point of view. If a business sells so many goods, they earn so much. If a goods business sells so much service, they earn. So total income that the country is earning is called as national income. We can also call it as total expenditure. Sir, why expenditure? Think from expenditure customer point of view. How many spending has been done in the market? So it will be the same answer only. So national income can interchangeably be called as national expenditure. Just to know how much goods and services people have bought and sold. Done. Now, national income is always taken as a year concept, okay, yearly concept. So we look in a particular year how much the country has earned. So national income, whenever they tell you, you will see they will be talking from a year point of view, that last year our nation earned so much, before that we earned so much. You must have heard of the terms such as GDP, etc. Okay, that in this chapter we will be understanding GDP and all the other types of variations as well. Okay, now we'll see how to measure the national income. So there are different ways to calculate the national income. So let's see. Okay, first we'll come here. I'll show you a full shortcut method, after which you don't have any difficulty only. Okay, so first you can see on the screen, and after this your entire concept will be perfectly clear. When I have to calculate the national income, there are three methods only. How many methods? There are three methods. Okay, I told you we can either call it as the income, or we can see how much spending has been done. So either I look at the income or I look at the expenditure method, and one other one is called as value addition method or final product method, or also it can be called as final product method. Okay, let's see. First, income, if I have to see as per income approach, I will look at all the four factors of production. Write this word, factors of production. So everybody knows there are four factors of production: land, labor, capital and entrepreneurship. How many things? Land, labor, capital and entrepreneurship. So four has been given. So from each one, how much are we earning? So from land, what do we get? You will get rent. From labor, by working hard, what do you get? You get wages, salary. Okay. Then if I have to look at land, labor, capital. Capital means giving money. You get interest on the loan that you give. So interest, and entrepreneurship means the profits that you earn. So if I have to calculate national income as per income method, I will add all the four factors of production. That means how much rent you have earned, how much wages you have earned, how much interest you have earned on your loan, and how much profit you have made. With this, I will come to know the national income. Now let's see, when we go to this is the income method. So when we go to income method, you will see in this you will take four factors of production. See the factors of production and the key land, labor, capital and entrepreneurship will be added. Finish. Simple concept. Now when we go to expenditure method. Now what is expenditure method? I told you, you look at how much spending has been done by the customers, by the government, by everybody in India. So first we will see the consumption. So in this you have to see consumption, how much you have consumed. So for example, from a customer, how much you have paid. So I'll say I have bought classes, I have bought clothes, I have bought food. So all the consumption that you have done, I will add it. One. Second, how much investments you have made. Okay, so then the investments will be how much you spend for investments. So maybe you will say I have invested in real estate. So how much you have spent there. Now this is from your point of view. Now even government expenditure will be seen, because government is also there. They spend on buying the parliament office. They spend on their salaries for their officers. Okay, so government also spends a lot of, they spend on so many public schemes. So we will take the spending by the government. And fourth, you will see the net exports. Net exports means what? Exports minus imports. So if I have made an export of 100 and I have imported of 30, so the net exports will be 70. Simple. So after deducting the imports, how much exports you have done. So it is C, I, G and net exports, that is your E minus I. Okay, very simple. So in expenditure method, I look at your expenditure. I must have done a personal level, I must have done investments, and then government expenditure, and then net exports. Done. So now when you go to expenditure method, so in expenditure method we look at how much expenditure, how much spending has been done. Total spending. So in total spending, if I go to see, it adds up all the expenditures made for final goods and services. Very important, you will always see that intermediate products are not taken, final goods and services that have been sold. For example, if I bought a raw materials, it will not be added in national income. Raw materials will not come. Final goods only, how much is being sold is counted. Okay. Otherwise, it will come out, it will have a problem of double counting. You are counting the raw materials being sold, and again you are counting the final goods being sold. So it will inflate and it will become double counting. So you have to take sale of final goods and services only. Okay. Then you will see how much consumption you have done, how much investments you have done. Then you will also catch the government, and then how much spending you have done, and then do net exports is exports minus your imports. Concept clear? Yes or no? Okay. Then we come to the third one, which is called as the value addition method. In value addition method, you add, for example, there is cotton. Okay, there is cotton. So then from cotton, there must have gone into processing it. There must be yarn, must be made into yarn. There must be some stitching. Okay, some stitching will be there. And then you have the final product, final sale. Okay, sale to customer. So what do they do at every stage? How much value addition has been done? So if it is sold to the customer for 500, we will look at 100 here the value was there. Then we added 50 value here. Only how much value addition was made at every stage. So how much value addition was done at each stage. Okay, you will add up. So here we will say this much stitching added 70 value, this added 30 value. So how much it becomes? 100, 200, 250, and then you add 250 more was added by profit. So ultimately this is the 500. Either you take this 500 or you keep adding at every stage. So normally when we take the expenditure method, we directly take this 500. But in value added method, what they do, at every stage wherever you added value, only that you add up. Concept clear? In value addition method, what do you do? That at every stage how much value has been added, you add it up. That is it. So obviously it's a little long process, and every time you have to keep adding, rather than the expenditure method where you directly take the 500 is easier to compute. Okay. Now we did income, your okay, so this is called as product method or value addition method. Please write the word value addition method. Value addition method. So what do? You have to identify how many steps are involved. You have to identify how many activities are involved. Then you will estimate net value added at each production stage. Okay. Now my question is, do you take in national income only sale of goods or services or both? Obviously in national income you will take goods and services. So both goods and services are to be counted. Concept clear? Yes. The main sectors, from all the sectors you will take, the main sectors in India, which are they? Agriculture, manufacturing, almost everything comes. Construction, okay, banking, defense, distribution of income, transportation. So all the major sectors will be taken. You will see how much value addition has been done, and you will do. Okay. So we always have to ensure that we don't do double counting. Final goods is also counted, and then the intermediate product is also counted. It will lead to inflated figure, not correct. Clear? Then again we see you have to be careful. Some of the things you have to be careful, that final goods are only to be taken, intermediate goods are not to be counted when we are doing national income. When you're doing value added method, then you will not count the final product. Okay, so these are the three methods which is there. Now we will understand a very key factor of GDP. Okay, now we will understand a key factor of GDP. So we saw, sir, what is national income? So national income is the total income earned by a country in a year. In a year is called as national income. There are three methods. What are the three methods? Look at this. Product or value added method. If you remember, product or value added method will be easy. So you will take value of the finished goods and services. Wherever you will add the net value at each stage of production. Okay. Expenditure method, I told you, expenditure of the household, then investments made by businesses, government expenditure, and net exports, as we did. Then comes income method or factors of production. So I told you, for income method, always remember factors of production. How many factors of production is there? 4. Land, labor, capital, entrepreneurship. For land, you get rent. Labor, you get wages. Capital is your money. You get interest, and entrepreneurship, you get profit. So you will add it. These are the three methods of computing your national income. Okay. Now we'll be understanding some key concepts of GDP and different kinds, GNP, many variations. I'll tell you the logic also. Just before that, you have to understand the meaning of factor income and transfer income. Always when we are calculating national income, we calculate the factor income. So income earned from factors of production. So 4 factors of production are which? Land, labor, capital, entrepreneurship. We did that. That is called as factor income. Okay, it is a earning concept that you have earned through your efforts. Transfer income is anything other than factor income. We do not render any productive services in return. It is a one-sided concept. In factor income, maybe I gave charity, maybe someone got a scholarship amount. Okay, one in Canada they give unemployment allowance. Okay, there is a social security that in case if you lose your job, you will get the money, age-old pensions, etc. So this is called as transfer income. It is not included in national income. National income means how much you worked and earned and sold. If someone is sitting and you give charity, it is not to be counted. So transfer income is not earning wise. It is a charity based or one-sided concept. Okay, without giving any valuable thing in return, you are getting the money. Okay, pocket money from parents. So parents are giving money to the child. Or let's say another example, the service of your mom. Your mummy is working so hard Your parents are working so hard. They are giving services to you of upbringing. They give you pocket money. All of that is not to be counted. Okay, that is not coming in factor income. Doesn't not related to business. Okay, or hard work. Now we are coming to one of the most important things to understand what is domestic income and what is national income. Domestic and national income, extremely important. Let's see. Okay, so now pay attention to this, what you need to understand each one. Now if you understand this, your chapter will become very easy. Domestic income and national income. What is domestic income according to you? Domestic means what? Territory. It is in India. So territorial base. How much you are earning in India? So territorial. It is territorial base. Means in India, how much money, goods and services has been earned. So it is whether it be a foreigner or a resident or non-resident. It includes resident and non-resident. So both come. So how much earning in India? It calculates the earnings in India by resident or non-resident. So both of them will be added. Why? Because in, let's say, a foreigner who has earned money in India will be counted in domestic income. Why? Because he was on the territory of India. National income, nationality comes from citizenship. Okay, so in citizenship we are going to look at Indians. How much Indians are earning? It is a resident based. Okay, so those who are resident of India means citizens of India. National based means what? Indians earning in India. So you will take it calculates earnings. It calculates earnings of Indians in India and abroad. Okay, so very simple. If I want to go from domestic income to national income, how will I go? If I want to go from domestic income to national income, very simple. They have said that you have to add NFIA, national factor of income abroad. How do you do it? Pay attention. So first, is this clear? Domestic income means whoever is standing on the land of India, how much are they earning? National income means what? Citizen, whether you want in India or outside India, how much citizens of India are earning. Now from year to year, if I want to go, I have to add NFIA, net factor from income abroad. What is it? Logically understand. Forget about what is there, I'll show you from a simple concept. Okay, you tell me. If it is domestic income, that means I want to go to national income. So I will have to remove the non-residence income. So I will remove the non-resident income. And in domestic, they don't take Indians earning abroad. So I will add incomes, net income earned from abroad. So I'll add these two figures. So I'll get my national income. So from domestic income to national income, I will get by adding NFI. Clear? Very simple. Logically, if you understood, it is done. Okay. Now, always remember one more thing, that now this we will come to another concept. Okay. Now this also I want you to note down. Wherever I have written, I want you to write it down. Okay. So then your concepts will become very simple. Okay. So first thing is, from domestic income, if I want to come to national income, what do I have to do? I have to add NFIA. I have told you what is NFIA also, how you can come. From national income, if I want to come to domestic income, I have to deduct NFIA. Common sense, I'll get domestic income. Clear? So this is category 1 and this is category 2. Simple. Now imagine cost. It is called as factor cost. Factor cost, why? Sir, why factor cost? In GDP, when we calculate the national income, we only take factor cost in mind. We only take factor cost in mind. We don't take transfer income. Transfer income we see in charity, services at home, etc. is not counted. Factor income means you have earned from factors of production, cost price plus profit. How do we come to the selling price? So cost price, if I have to see the market price, from cost to market price you have to go. So today if the cost is 100, you go to sell, then GST will come, that is called as indirect taxes, GST. And if government is giving a subsidy reduction in price, so then the market price will come. So very simple, if I have factor cost as 100, the cost of the product is 100, GST is 18% and government is giving a subsidy of 8. Government is giving you a subsidy. So you'll reduce the subsidy. Subsidy is the financial benefit. You'll reduce it and ultimately you'll come up to 110. So from factor cost to market price, you have to add the taxes, indirect taxes and reduce the subsidy. If from market price I want to come to factor cost, so obviously I'll do the reverse. I'll do minus IDT minus subsidy. I will get my market price. This is the second part. Clear? Very simple. Now remember the third thing. From net gross, if I depreciation, I'll get net. Okay. So in my net figure, whenever they use the word net, means it is excluding depreciation. It is excluding depreciation because gross includes depreciation. So if I say that the net figure is 100 and depreciation is 10, so the gross amount is 110. So remember that net excludes depreciation and gross includes depreciation. Common then, gross means included. Gross itself means included, and net means excluding. Clear? So this I wanted to note down. Sir, why like that? Again I'll tell you. Remember, for depreciation we have to see gross and net. In gross it is included, in net it is excluded. So in gross it is included and depreciation is excluded in net. Okay, depreciation. So gross and net is related to depreciation. If I go next, NFI, okay, national factor of income abroad. So domestic income, if I want to go to national income, I will add NFI. Okay, then you come here. Then when we say the word factor cost to market price, so factor, it's a cost price. You will add GST and reduce subsidy, then you come to market price. Clear till here? Yes. So with this now you will be able to build something. Let's see, I'll show you what can be made from here. Okay. Now all the terms you will understand perfectly. If I tell you gross means including GST, depreciation. Okay, includes depreciation. So now you can understand the meaning when I say gross domestic product. Now domestic means what? It includes NFI, right? It includes NFI, and if I reduce it, minus it, or gross plus NFI, you will get your national income. So gross means setting issue. Okay. Hi guys. So we'll just resume. There was some disruption in the power supply. So now we'll resume with the part where we had left. Okay. Now before I start, please let me know in the chat box if I'm audible and visible. Okay. So I can quickly start and complete. We'll just resume there. Okay. Great. Perfect. Perfect. Understood. Okay. Now before I start, please let me know in the chat box if I'm audible and visible. Okay, great. Please in the chat box can you mention so I can quickly start. And I'll also come to know where we had left. Great. Okay. Great, so Arvind. Please start and complete. Okay, so now we'll be starting. So now we continue that from your understanding the keywords such as gross relates to depreciation. It relates to depreciation. Gross includes depreciation. We know that net excludes depreciation. We know that. Okay. So whenever I say gross means that amount is including depreciation. Whenever I say net means that amount is excluding depreciation. Please first get these two clear. This and this clear. Okay. Now, gross domestic product. Domestic means we are done. What does domestic mean? It includes all the income of everyone on the domestic territory of India. In India, foreigners, India's income we will include. Okay, when I say NP, national product. So what was national? That we are including all the income of Indian citizen, nationality, citizenship. So whether it be in India or outside India, all Indians' income will be calculated. Okay. So GDP, GNP, perfectly clear. So gross, we have to include the depreciation of everyone who is working in India, whether India, foreigner or domestic. If I say the national means only the citizens in nationality, whoever is having their amount, their sales, and the gross sales will be taken. Now it could be at factor cost, means the cost price, or the market price. For market price, you have to add the GST amount and reduce the subsidy. So that is that same for both. Net, when I say net means it excludes the depreciation amount of all the people who are working in India. That is GDP at factor cost at market price, GNP at factor cost market price. So once you understand this table, all the key terms are clear. What is included, what is excluded. Simple. Now we move forward. Okay. Okay. So now we can go from the chapter, we can complete. We finished all the three types of expenditures. Then now they'll give you the headings, which we know. GDP at factor cost. You don't need to read everything. I'm giving you the concept. You should know what does G stand for, what does D stand for, what does factor cost stand for. That's it. Individually you add it up, you're done. So then comes GNP, NDP, all of which will get covered. Okay. GDP and nominal GDP we will take it in some time, but rest you see what is there. Okay. Now we are talking of your GDP. Now pay attention. GDP is basically your quantity into the actual prices. Is called as nominal GDP. Very simple. So if imagine I have sold two goods for 1000 rupees, then the GDP is how much? 2000. Very simple. So GDP ideally is the total sales that have been made. Total sales that have been made of goods and services. So two products sold of 1000, GDP is 2000 rupees. Very simple, very logical, no complication at all. Now what happens here, the same price, same product, let's say is one is sold and the prices have increased to 3000. So the GDP will come as 3000, but in reality only one product was sold. So if we take one product has been sold, okay, for let's say one product is sold for 3000 rupees, the same product. So the GDP nominal price is how much? 3000. Now what is happening? The goods prices are increasing, so the inflation is included. Imagine this same product was, two products were sold, quantity sold and price. Okay, same goods, same goods, same goods. क्या पता वो तो हो रहा था बट अभी चल रहा है, चलता है ऐसे, कभी कभार इशू होता है। जल्दी आ जाऊंगा, आज भी मेरा होने आया है, मतलब ज़्यादा टाइम नहीं है। बट फिर बाद में फिर तो फ्री हूँ मैं, फिर लंबे टाइम तक फ्री हूँ मैं। फिर बाद में मेरे हिसाब से कितने 5-6 बजे निकल जाएंगे कहीं ना, मेरा ख़त्म करके आता हूँ फिर। ओके बाय बाय। हाय। Okay. So now we'll just continue with its few parts and then we'll be done with the chapter. Okay. Before I start, just let me know if I'm audible and visible so I can quickly start. Okay. So am I audible and visible now quickly? Okay, great, great. Thank you. So there was some disruption, I don't know, but now I think it should be there till the end. Okay, so we should be able to complete this entire lecture till the end. Okay. So everything good? Yes or no? Just write GTG in the chat box so I know that I'm audible and visible now. Okay. So now we continue. One is what is included in national income and what is excluded. Very important, they can ask you for MCQ. Okay. So firstly, illegal income earned through corruption, etc. So that is not included. Common sense. Gift and free of cost services. Parent, you have given a gift to someone, that will not be counted. Free of cost services, your mom takes care of you free of cost, it is not to be counted. Resale of goods, so only sale of original goods is only counted. So sale of resale, when you sell on OLX or any of that site, that is not to be counted. Then comes social security. Social security is also not to be counted. Social security is basically part of transfer income we had done. Government giving you money, that is not to be counted. Revaluation of your assets. So your house was sold to you by the builder for 2 crores. Now that house is of 3 crores. It is not to be counted. Even resale is also not counted. The increase in price after the purchase is also not to be counted. Construction of a new house is to be counted, obviously. Why? Because it's a sale of new product. Okay. Now let's look at the next thing. Okay. Now further, now pay attention to this, very important. Okay, this bifurcation and everything will get over. So first, national income. Okay, NNP, it is always NNP at factor cost. Sir, what does NNP at factor cost means? I have taught you this earlier. N means what? It is net, it is excluding depreciation. One. Then it is national, means only of what is national citizens of India. Okay, at factor cost. So only cost price is to be taken, profit etc. is not to be taken, GST is not to be taken. Okay. Yeah. Then this income includes national income concept, includes government's income also, and it includes a private sector. So one is government sector and private sector. So government sector income is included. Okay, in national income, even the private sector income is included. Remember, we had done the calculation where we were seeing even the government expenditure is also counted. So both of that is there in national income. Now, if I want to come from national income to private income, what I need to do? I have to remove all the government related income. So now pay attention. From national income to private income, I want you to note it down, write it down, or take a screenshot. From national income, if I want to come to private income, I need to do these adjustments. First, I will remove all the government's income and its savings, because I am removing the government sector income, right? Then transfer income is to be added, because in private income we are talking of private, you and me, all the private sector, how much they are earning. So that also has to be added. Why it has to be added? Because it is not added in national income. Okay, because it is at only factor income is only counted. So here you add the transfer income also, all the other incomes also is added. Then you also add the interest on public debt. So what happens? The government, what is public debt? Government has taken a loan from public, so it is called as a public debt. Government has taken a loan from public. That is why it is called as public debt. Government will then give interest on this debt. Government will give interest on this debt. That is called as interest on public debt. So that also will be added. That will also be added. Okay. Why? Because in private sector is only earning, they only give a loan to the government, so then they will earn the interest. So all these adjustments you will do, you will get your private income. Simple, yes or no? Okay. Now, sir, what is private income? Private income means private sector. Other than government sector, all the income will come. So private sector includes household of yours and mine, and also of Ambani and Adani and all the other business houses, corporate. So in private sector, we are talking of individual and corporate. Okay. So from here, what will happen? Now we want to go from private income to personal income, personal of yours and mine. Okay. So in household income is the individual income, and this is the corporate's income. So now we are going from private to personal income. Now we are going from private income to personal income. So these adjustments need to be made. Now logically, what I will remove? House, if I want to remove from personal in private income, I will remove the corporate's income. So the corporate's income will be removed, taxes, so all those things related to corporates will be removed, and then you will come to know how much you are getting in hand. Okay, so I will remove that, then you will come to know that how much is your personal income. Okay, so how much income you are getting. Now from that also, personal income, then all your expenditures, etc. Then you will see the disposable income that you have. So you will learn that in your house you're getting salary of 30,000, 1 lakh rupees, but then in the end hardly anything is left for investments. So the disposable income is how much you can use later for investments, etc. So I hope this hierarchy is clear. So the biggest is your national income. Then you remove the government sector, you get private income. Then you remove the corporate sector, you get the private income. Then in private income, when you remove all your taxes, you will get the disposable income that you can use in your day-to-day life. Concept clear? Yes or no? Okay. So domestic income we've done, private income we've done. Okay, private income, what we said. How do you come to private income? You will remove all this related to public undertaking, means government undertaking, profits of government undertaking. You will remove national income plus transfer payments plus this. So this I've shown you what you have to do. Personal income, everything. So they show the full calculation from the start to the end. Personal income here. Also we've done disposable income. Now what is disposable income? Keep subtracting. I've shown you the format. You just write that is more than enough. Okay. Disposable income is the personal disposable, means the actual income that can be held on consumption by individuals and family. Whole income cannot be spent on consumption because it is before the direct taxes. So after paying your personal taxes, Money you get in hand is your disposable income. Okay. Then comes real income. Whenever I say real, means what? It is adjusted for inflation. It is adjusted for inflation. So you will look whether you have really grown or no. So you feel that your salary is increasing 10%, but inflation is also increasing. So what do I have to do? I have to keep the prices of the base year only to see whether I have really earned or no. National income is there. Real NNP we've done. Now per capita income. Per capita income. Very, very important. Now what is per capita income? All this we covered. Real income adjusted for price change. Okay. So formula is NNP into 100 divided by the price index. Just remember per capita income. Now per capita income means what? What is the total population? So we will say that we have 100 crore population. Example. Then you will take the income. Okay, total income is there of 1000 crores. So you will divide it by the population. So the income divided by the population size, then you will come to know per person how much income is there. So we have come to know that rupees 10 is there per person. So let's say in your family you are earning 40 rupees and there are 4 people. So per person how much they are taking home? 10. So it is per head income. You take the full national income and divide it by the total number of people. You will come to know per person how much it will be taken. So it's the average income of a person as per the per capita income. So what you have to do? National income divided by the population. Simple. Okay, with this we've completed your entire chapter of national income. Thank you. Okay, great. Now we'll just take a 5-minute break. 5-minute break, and we will start with Union budget and completed. Okay, Indian Union budget and completed. Okay, so let me come from here also, Indian Union budget, and we'll take a 5-minute break and we'll come back. Okay, so now I will come back and complete the full chapter. So be with me, and this chapter also will be completed in like 20 minutes. That's it. Okay, just a sec. My voice was not visible. Thank you so much. Just realized. Crazy, okay? So let me start again the entire chapter. Yeah. So it was muted, that is why our sound was not there. But now let's start. I'll restart, okay? Thank you so much, Arvind, for messaging and informing, okay? Now let's begin. Hi, we'll be starting with a chapter called as Indian Union Budget. The Indian Union Budget is also called as a financial budget of the country. Okay, financial budget. Now, financial budget. It gives you the details of where we will get the money. So, from where the income will come for that year and where the expenses will be made. So always a budget you will see it is for a year. So it is a annual financial budget. That is why the first very important MCQ they will ask you that the Indian Union budget is also called as a annual financial statement. Annual financial statement. In that financial statement they will say from where the income will come and expenses they will say where the spending will be done by the country. So Government of India's source of revenue, there are two sources of revenue. Can anyone tell me? Obviously taxes and non-tax. Non-tax could be penalties that the government is holding or any kind of interest the government is earning on the loans that the government has given. So these are the two common sources of revenue to the government, receipt. And expenditure, the expenditure list is large. So from where all the expenditures can go? Now I'm just thinking, where will the government spend? Obviously for healthcare, for defense, okay, for the salaries that the government has to pay, etc. Now, when the government makes the plan, okay, they literally say that listen, we break it down that the budget will be broken down into two parts. Okay, first they will make a capital budget, and they will also make a revenue budget, revenue budget. So in capital budget you will have long term activities, long term balance sheet items will come, and revenue are your profit and loss, your daily regular repeated recurring expenses will come here. Okay, for example we will take your salaries, salary will come here, or we could say in revenue repeatedly expenditure that we have to keep doing. Salary is very common, okay, then any kind of expenses with the government has taken, things on rent they have to pay, interest that they have to pay, all of that is a recurring expenses. Now capital budget could be when they are purchasing property, when the government is purchasing property, shares, all this is hits your balance sheet, land, plant and machinery, think in the balance sheet item what all comes. So same things will come here. In the profit and loss account what will come? Interest on the loan, you could say salary, any kind of expenses that the government has to pay, etc. will come in the revenue budget. Okay, now understand the background, the full background. First, the Indian Union budget is also called in India dash the annual financial statements. Okay, the annual financial statements literally tells you from where the money will come and where the money will go. Okay, now Government of India has the budget is further divided into three parts. First is Consolidated Fund of India, where the government is going to get the income and expenditure, which we saw is mainly the planned activities. We already know that we are going to make this road, we are going to have these projects, it's called as planned. We also keep around 500 crores inside for contingency fund. Contingency fund is basically unforeseen expenses. So like your defense of India, suppose there is a war, sudden war, natural calamity, COVID, pandemic. So we keep some money in the side for contingency, things which we are not planned, which can come sudden. And one third one is public accounts, where the government also tells that money that they keep as are trustees, maybe pension funds. Pension funds. So for government employees, the pension is cut, we keep it in the side. PF is cut, it is kept in the side. So here the government is acting as a trustee for the people. So in the annual financial statements, all the three is spoken about. Where the money will come, where it will go, contingency, and basically as trustees how much we are holding. Clear? Now, as we saw, the very important part, you can mark it as super important to understand this concept. Okay, the budget, government makes capital budget which affects your assets and liabilities. This is recurring in nature. Now capital budget further can be like a balance sheet item from where credit can make and where debit will be made. So credit, so capital receipt, when we have taken a loan, so we got the loan amount. We made a sale, so we got the asset amount. This is very important from MCQ point of view to understand. Second, capital expenditure. So we can spend. Earlier when we make a sale, we get a capital receipt. When we make a purchase, we make a capital expenditure. So here the purchase will come, and here always sale will come. Okay. So when we purchase assets, it is a capital expenditure. Same for revenue. Now in revenue budget, when we make, we will say from where the revenue receipts will come and where the revenue expenditures will go. So dividend income, government has bought shares, so they will get dividend income, it's going to regularly come. Interest income, all this is one time regular income that keeps coming. Expenditure will be salary, pension, interest that we have to pay, etc. is the revenue budget. Okay. Now, then comes to the concept of fiscal deficit. Comes the important concept of fiscal deficit. Deficit means what? When the expenses are greater than the receipts. When we are planning and we realize that we require so much money, we require 1000 crores and we have only 800 crores. So then we come to know the deficit. So deficit, then we will have to think that this 200 crores, how we will fulfill the deficit. So then we will issue new shares, government will think of taking a loan from World Bank, etc. So capital deficit, okay, is capital income when it is greater than your capital expense. So very simple, when the expenditure is greater than income, it is equal to deficit. Now just write the word capital. Capital expenditure is greater than capital income, it is a capital deficit. If I put a revenue expenditure is greater than the revenue income, then it is a revenue deficit. Please take a screenshot of this as well. Very, very important from exam point of view. So capital income, capital receipt. Clear? Done. Okay. Now we understood what is revenue budget, capital budget, and fiscal policy. Fiscal policy is the monetary policy of India. How much money will come, how much money supply will be there. All of that is also discussed. We've done revenue budget, we've done capital receipts, revenue expenditure, other expenditures. Very simple, we've seen. Okay. Now planned and non-planned. Now what is planned and non-planned? So basically, which we've already planned that we'll do it in this phase, we know long-term growth. But non-planned is a sudden thing that can come like defense of India. And public sector, budget will also be kept, that how much we will buy. Government can also buy shares. So that when the government buys 51% shares of any company, it will be called as a public sector undertaking. Okay, it will be called as a public sector undertaking. Clear? When the government buys shares. Now, if we go to see the highlights, fiscal deficit also we have done. When the expenditure is greater than the income, is called as a fiscal deficit. No rocket science. Capital expenditure, capital and revenue deficit is also same concept. Then we look at the union budget, Indian Union budget of 2016. Very important. This you can take a screenshot if you want to take. So the first thing is we have thought that we will make India into a Viksit Bharat, a very big thing, where they have said that by the principle of Demasmati Masulai, which means a nation in its people. Okay, nation is working towards its people. And here when we go, same from your budget speech is there. So we know that on the budget day or budget speech is there, it is entirely read out by the finance minister. Okay, the policy, social welfare programs, how much allocation is given. So from where the money comes, tax and non-tax or borrowings, where the money goes for all the schemes that the government is there, pension, interest payments, any kind of subsidy government is giving, etc. Three major components is there: capital and revenue, and fiscal is the full statement. Okay, then revenue budget we've done, revenue receipts we've done, tax revenues can come. Now tax obviously we know is your direct and indirect tax, GST, excise, customs, non-revenue, non-tax revenue, so penalties. So mostly you go to see all these countries like Dubai, etc. They levy so many penalties and heavy fines. So that is a good source of income. Dividend income could be a good source of income. Okay, then revenue from public sector under, so where the government has made an investment, they are getting dividend, etc., sale, etc. Those are all sources of income. All this we cannot learn, just the headings is enough. Revenue, expenditure, etc., planned, non-planned, same. Now, one thing about the budget 2025, they have given one thing which I feel will come in your examination. I'm giving an importance also according to me, where they have taken a person's name. Okay, so this they have newly added, so it becomes important. Yeah, okay, from your. Remember, I told you one thing, that the Union Budget 2026. So basically, we want to grow, we want everyone to grow, we want to make India into a, sabka saath, sabka vikas. Now, this is the point which I'm saying, which may come in your examination. Okay, highly expected in your examination. This. Okay. The great Telugu poet. Okay, this I think is a short exam question. Gurujada Appa Rao said. So, main you can remember that who was the Telugu poet who said the Telugu lines, which means a country is not just its soil, it's a country in its people. Okay, so this you can remember, important from MCQ point of view. Telugu poet Gujarajada Rao, who said that a country is not just its soil, a country is its people. I feel it is a short MCQ question. Okay, and when we say that India is a Viksit Bharat, means in Viksit Bharat, what do we want? So government is working towards zero poverty. We know that the central government is working very hard towards ensuring that people are uplifted below the poverty line. There should be zero poverty. 100% good quality school education in the government sector. So the extreme improvement in the schools, government schools is seen. Then you see access to the high quality healthcare. So when you go to the government hospitals, you'll see a tremendous amount of improvement and very high quality affordable prices are there. Then 100% skilled labor and meaningful employment. So the government is working hard towards making all the people skilled in their profession. 70% of women in economic activity. So encouragement of women into the things, and farmers making our country, making the country the food basket of the world. So we want to make India the food basket of the world. So some of these points you can remember. That's it. Okay, and then we come to a very important thing. Okay, some thresholds are given. The important ones I put it up here. Okay, key government. I don't feel they will ask you. Okay, this, but core objectives: eradicate poverty, education for all. All this we have done. Now, one thing which I feel further that they can ask you is the thresholds for SME, thresholds for the SME sector. Okay, here I think sure. Again, you can take this as very very important. All this you can just do a heading, not important, but MSME extremely important. According to me, this is again very important. Expected to come in the exam. Okay, expected to come in the exam. That MSME limits are being revised limits. Okay, so what is a MSME? It's a micro, small, and medium enterprise. So micro, small, and medium enterprise. So this is the revised limits that you need to know. If the investment in plant and machinery is up to this amount, it is a micro, small, medium. If it is basically your till your, okay, we look at this part, turnover. Okay, so turnover. So then this is the limit, revised limit. Clear? So this you have to learn. There's nothing more to it, but very important from MCQ point of view. According to me, 110% they will ask this in the exam. So you need to know that a micro is basically uses plant and machinery is up till 2.5 crores. Small is 25 crores and medium is 125 crores rupees in crores. Clear till here? That is important. So they had introduced in the MSME new thresholds. That thresholds extremely important. If they want to ask, they'll ask this only. The rest all is just facts, not too important. Then if you go to see the taxation, direct tax. So what all is there? Up till revised tax structure, no personal income tax. This also they will ask you in MCQ. Today, if someone is earning a salary up to 12 lakh rupees, zero income tax. So there is zero personal income tax up to a limit of dash. This they will ask you in MCQ. The limit will be 1.275 lakhs for salaried due to the standard deduction of 75%, 75,000. So this you have to remember. The limit will become further 1 lakh or 12 lakh 75,000 for salaried persons. Okay, then the new structure is there. So always you see anyone who is above 24 lakhs has to pay 30% tax. Okay, so if anyone, most of the people can come in this bracket who are professionals, 25 lakh rupees, 2 lakh rupees a month is nothing. So then they have to pay 30% in their personal income tax. Okay, so that is it. Thing indirect tax, customs is there, all this is just facts, and we have completed the entire chapter. Thank you. Okay, is the concept clear? Yes or no? Okay, yeah. Is the concept clear till now? Yes or no? I've given you all the importance that can come in the examination. Now we'll start with your lesson number 4. Okay, which is your Indian financial markets. Can I have clear in the chat box? Clear in the chat box so I know that I'm audible, visible, and you've understood the chapter nicely. I've given you the importance also what comes in the examination. Okay, great. So now we will just start in 5 minutes. We'll take a 5-minute break and we will come back and start. So maybe 3:30 we can start. So 3:30 p.m. we will come and complete this entire chapter in one go. Okay, so am I audible and visible now? Okay. So we'll be completing this next chapter, which is your Indian financial markets. Okay, Indian financial market. So just let me know in the chat box if I'm audible and visible. Okay, so we'll quickly start and complete this chapter. Let's begin, okay? Hi, so we'll be starting with your lesson number 4, which is your Indian financial markets. Now, when we go to understand that what is your financial market, so a market is a place wherever any buying or selling is done. Now, in a financial market, buying and selling of financial instruments will be done. Okay, financial instruments could be shares, mutual funds, derivatives, bonds, etc. are sold. Debentures are sold. Now, function of a financial market. What is the purpose of a financial market? Very simple. That one, there will be investors, and there will be certain companies, corporates who need the money. Okay. So the investors invest their savings. So they want their savings to be turned into investments. In return, these companies will make profit and give them some return on investment. Return on investment. So it mobilizes savings into investment. So it mobilizes savings into investments. Means what? Your savings will be converted into investments and you will be able to grow your money. Okay. Next, even if we see the other things is price discovery, you come to know what is the market price of the goods. You can allocate, that is invest your money safely, and there are certain risk management tools where we have certain regulators ensuring that the smooth functioning of the financial market is there. Now, types of financial markets. Now, various types of financial markets are there. Like for example, if I tell you invest your money, so two major players are there, which is called as capital market, and the other one is called as your money market. Money market. Now, what is capital market? A capital market is a place where long term instruments are bought and sold. Long term means greater than 1 year. Okay. So shares, debentures, mutual funds will all come in capital market. Money market is basically where short term instruments are sold. Short term instruments maybe for 3 days, 5 days. This is for less than 1 year. Okay. The regulator here is SEBI, Security Exchange Board of India. Here the regulator is RBI. Means who regulates, governs, supervises the entire market. Capital market is done by SEBI, money market is done by RBI. Then even we have commodity market. Commodity market means today you can even buy gold and in form of securities. Means in your Zerodha app or in your Demat account, as you buy stocks, you can even buy commodities. And when I say commodities means what? Gold, silver, copper, aluminium. Just like how you buy and sell goods, buy and sell your security shares, you can buy and sell your gold. In India, we have MCX, okay, and NSDX, that is multi commodity exchange, which deals with your commodity market. And NCX is basically the National Commodity and Derivative Exchange. Then money market, I told you, where short term instruments are bought and sold. Now we come to derivative market. Derivative market is basically a market where you have four kinds of activities: forwards, futures, currencies, options and swap. You have options and swap. Options and swap. Right now you don't need to get into that, but just understand in derivative what happens. The value of your contract, is derived. That is the word derivative comes, is derived from underlying asset. That means I can buy commodity derivative, means I can buy gold, silver, etc. If the prices go up, I earn. If the prices go down, I lose. Then commodity currency derivatives. Currency derivative means I can even buy dollar, pound, euro. That also you can do. Commodity derivative, then stock derivatives. Even for your shares, I can take a betting. It's somewhere similar to betting. Okay, forward, futures, options, and swaps. Foreign exchange market is basically where dollars, etc., which I told, dollar, pound, euros are bought and sold. Then now it is a popular coin DCX. If you have heard of coin DCX, from which you can buy cryptocurrencies. So cryptocurrency, the most famous is your Bitcoin. You have your Ethereum. These are the two most common, and the players in the market are ZepPay, or you can even say Wazir X. These are the Kuber, coin switch, from which you can buy cryptocurrencies. Spot market is basically you go and directly buy on the spot, pay the cash and take the goods and leave. That is called as spot market. Okay. Interbank lending market is basically between banks the lending happens. Okay. So one bank gives a loan to another is called as interbank. There is a rate at which they can give a loan. Now, overview of the Indian financial ecosystem. So, as I told you, it converts your savings into investments. Okay, companies get funds, financial transactions can be done. So, main if we come, I'll tell you what can be asked into the exams. Now, components. So, we just going through the chapter. Wherever it is important, I will tell you. We're just running through the chapter. Now, components of financial market. So, what all is there? So, basically, institutions, market, money market, capital market, all this we've seen. Instruments could be shares, debentures, services are various intermediaries like broker, etc., who will come in. Now, when we talk about our banking sector, so if we go to see, the banks were there even before the British, I mean, at the time of British era, the main banks. Now, this is important from MCQ point of view, that the Britishers East India Company set up three banks, that is Bank of Bengal, Bank of Bombay, and Bank of Madras. So you can say Bengal, Bombay, and Madras. Okay, so this the Britishers made three banks. Then these three banks were taken over and merged into one bank called as Imperial Bank. So all these were merged into, they were merged, joined to make one called as Imperial Bank. Clear till here? So they were later merged to make Imperial Bank, and then later this Imperial Bank became SBI, State Bank of India. This is one of the most important MCQs that they can ask you. That is it. And SBI as we know it today. Public sector banks is basically where government holds 50% of the stock. So Bank of Maharashtra, Bank of Baroda, Bank of Punjab, these are all public sector banks, where the bank has majority banks. And all other banks are called as, which are not governmental banks, which are private sector bank. HDFC, ICICI Bank, HSBC, Kotak, Yes Bank, these are all private sector bank. Okay, they've given you a list of what are public sector banks and which are private banks, Axis Bank, etc. Okay, now we are looking at one important, very important institution, two institutions. One is SIBD, okay, SIBD, and the other one is Industrial Finance Corporation of India. So you have Industrial Finance Corporation of India, and we are talking about SIBD. Okay, now let's look at Industrial Financial Corporation. We should know what work does it do. There's a Financial Corporation of India, so their job will be to give loans, finance. Now pay attention. The IFCI was the first development bank of India, so it wanted to develop. Development Bank of India. They would develop ensuring manufacturing, infrastructure, agriculture. So very simple, these sectors will be financed. This institution later became IFSC Limited. So it was a corporation, now they made it into a company. So IFSC now became IFCI Limited. It became a public company. Public company. Now looking at what is the main key function. So obviously it would to develop the country, okay, and various sectors they would give the funding. They have the following subsidiaries, all these sub companies that it has made, and the following institutions are under its social sector initiative. So this all is to help the society. Management Development, Indian Institute of Leadership Development, Gramin Vikas Nidhi. So what IFCI? It is a NBFC. It is non-banking financial company established as a public sector undertaking. It gives a financial support across various industries. As I told you, all these sectors: manufacturing, real estate, agricultural, non-agricultural, advisory, all the services are given. So what is the job of IFCI? It is to become the provider of financial needs, give loans, and develop the country. So very simple. Just remember two things. They are a development bank, India's first development bank, and their job is to give finances to various sectors to help India grow. Now, most important is SIFD. First, they ask you the, in MCQ they can ask you the full form only: Small Industries Development Bank of India. Now, this, if you go to see, when they say small, that means they give it to the MSME sector. They give loans to small entities, micro, small, medium enterprises, okay, poor people, below the income groups. So certain, we could say, dependent groups, they will be given, underprivileged groups. So it was set up on 2nd April 1990, okay, by an act of parliament, and their main job is to support the MSME sector. Small means they will give small entities loans, okay. So the main initiative aligned with their goals is poverty, removing people out of poverty, employment generation, okay, entrepreneuring, for encouraging entrepreneurship, fostering competitiveness, okay. Now some of this past 25 years they've provided a loan of 5 lakh crores they've established. So all, I don't think this they will ask you in MCQ. MCQs mostly they will ask you conceptual based, they can't ask you figures, keeps changing every year. Then we see to banks, okay, regional rural banks. Now what is a regional rural bank? If you go to see, simple concept, regional rural bank. So there are two kinds of banks. One which works in urban areas, metro cities, and the other one are in rural areas, villages, etc. So a regional rural bank is a bank which is set up in a rural area, okay, to help. Now in rural area they will support mainly agricultural activities, etc. Now you will see it works around that part only, okay. And rural, they might sometimes allow semi-rural also finance can be given. So the main job of this bank is to give credit facility for agricultural and other rural area sectors. Okay, it will be given. It was started on Gandhiji's birthday, Gandhi Jayanti, that was 2nd October, Regional Rural Bank. The current structure of this bank is that central government will hold 50%, other banks will hold 35%, and state government will hold your 15%. Not important to know, but just important to understand, okay. They perform the following functions. Now main job, what would they do? They would help all rural and semi-urban areas, not fully developed urban areas, semi-urban. They'll develop, get employment, give loans, etc. Para banking services can also be given like locker, credit card facility, etc. Now we come to cooperative banks. Many people don't know the concept of cooperative banks. So let me tell you, there are two kinds of banks in India. Two kinds, different classification can be done. So these banks basically could be cooperative banks, which I will categorize as profit making banks. Those who have set up with the objective of making profit. The other ones whose is non-profit making banks. Non-profit making banks. Here you will come with your cooperative bank. So this cooperative banks will come here. So is a cooperative bank profit making? Answer is it is a non-profit making bank. See, cooperative banks, they have been founded, I'll tell you, their primary objective is to encourage all these smaller people. Let's see where it is given that it is. Okay, so they haven't given much content, but you have to remember that they are non-profit companies. So what do they do? What do they do? So they are set up to help their own members. So they want to help their own members. Okay. So what happens? This is a bank set. What does the bank do? The bank has certain members. These members deposit money. Members deposit money and they get return of 4% interest. Okay. This bank will then give loan to its own members. Loan to own members at let's say 8% or 6%. 6% they give it to their members. So in return they get 2% profit, 2% gain. This they will reapply for the other expenses, etc. So this is the functioning of a cooperative bank. Okay. Now types of cooperative bank. 4 types of cooperative banks are there. Now if you go to see the 4 types, now it's just seeing the 4 types of cooperative banks. So one we see the central, state, primary and land. So if you go to see the central, which you think will be the biggest? Central actually operates at the district level. Central is operating at the middle level or the district level. Central operates at district level. Then the state level will come here. State level banks, they operate at district level and the rest at the top of the hierarchy credit structure. Primary credit they give it to urban and semi-urban and land development bank. Now see, this they talk about land development. All the others is understood that they give loans, etc. Here land development banks are divided into 3 tiers. Okay. Most important, the responsibility is given to your national bank, NABARD. So here the loan is given for development of land and infrastructure. Development of infrastructure. Now we come to a concept called as NBFCs. Market is important. Important, okay. Now we see NBFCs. Okay. Now what is a NBFC? It is very simple. It is a, now understand the concept, okay. Non-bank. So it is not a bank, but it will give financial services, but it gives finance. So it gives finance or loans. So do you know of any NBFC? Answer is 100% yes. You also must be a user. Bajaj Finance. Bajaj Finance. Whenever they give consumer loans. Consumer loans. Okay. Consumer loans. So what happens? What is this Bajaj Finance consumer loans? So basically if you got to go to buy a mobile phone, so EMI facility they will give you. It's like a loan only, na, that you have to repay it back to them. So this is not a bank, but it will give you a loan. So difference between a bank is supported by RBI insurance. So in case if money is not repaid, RBI will pay up till 5 lakh rupees. Okay, 5-10 lakh rupees they give a assurance. 5 lakh rupees, okay, insurance. Second, in bank you can open a checkbooks are given. This is one of the key things. In NBFC, never check. They can never issue checkbooks. Okay, bank can give you current account. Okay, NBFC do not offer current account. Okay, so this is the only difference that is there. So you cannot go open an account, etc. Here you just, so how do NBFCs get the money? They take from their members at 4%, same like how we saw earlier, and then they give a loan to others at 6%. 2% is the gain. That's it. NBFC. So they give a finance, but it is not a bank. You can't issue checks, etc. Okay, just think that you've taken consumer loan, so you don't have further more interaction with them. Okay, now there are various kinds of NBFCs. Now just I'll tell you what it is. Asset finance. Now companies want to buy plant and machinery, so they give you a loan to buy the assets. So loan is given, finance given to buy assets. Okay, to buy the assets like plant and machinery, generators, anything that you want to buy. Investment company. Now what do? They don't give you loan, they invest in your company. So they will invest and buy shares, debentures, etc. of company. So their main job is in investment of other company. So the company gets the fund, they can do the business. Loan company, NBFC, they basically give a loan to company for any purpose. Earlier we saw that they give only loan for one type of NBFC, they give only for purchase of assets. Here they give for any purpose you want. Maybe I want my working capital funds, I require for any other reason, they will give you money. I want to expand, set up a new office, they will give you money. Now infrastructure finance company. So just remember the word infrastructure means it is for roads. Okay, and at least 75% of its assets are given in infrastructure loan or as net owned funds of 300 crores or have a minimum rating of A and a CRAR of 15%. Now, for a NBFC to be categorized as an infrastructure, so basically 75% of the loans that they give have to be infra loans. Then we will say it's an infrastructure finance company. They need to have at least, infrastructure projects require a lot of money, so they should have minimum 300 of their own funds. Okay, and they should have got a A rating. So there are various companies which give ratings. So this NBFC should have got a A rating and a CRAR. Just remember, it's a figure that they have to have of 15%. Then comes systematically important core investment company. So just remember, when they say systematically important, means for which system? Indian system, it is very important because they have 100 crores assets of 100 crores. Imagine any company that has 100 crores today is systematically important. So they just told it's a investment company, it invests in shares, etc. But 90% of invest in group companies. So they invest 90% in group companies only. So maybe Tata Group will set up a systematically important investment company, and that will invest in give loans to its own group companies. If, let's say Tata has made this NBFC, then any Tata company require loan, they don't have to go outside. They'll just go to this company and take the loan. Then comes infrastructure debt fund. Now from the name itself, it's infrastructure and debt also. That means they will purchase debenture, they will give loan, debt. Okay, they give long-term debt to infrastructure projects. Clear? Then comes next is NBFC for microfinance institution. Now, moment I say micro means that they are giving it to small people, small loans. So, small loans, small people, small people. Okay. Now, 85% of its assets, 85% of its entire loans has to be given to microfinance. That is, those who are earning maximum 1 lakh 20 in urban, 60,000 in the rural. Means we are telling who can be the borrower. So they should be poor, maximum 1 lakh 20 or maximum 60,000 rural area. Okay. Loan amount should tenure should not be less than 24 months. That's it. Then comes factors. Now, what are factors? Understand, this is about daters. So basically, this is a NBFC which gives you loan against your daters. So they give you a loan against debtors. In your 12th, etc., you must have learned of bill discounting. They help you in bill discounting. So it's a NBFC, you go to them and they can discount your bills. They are factors. Then mortgage guarantee company. So if any person is there, they're taking a loan, but the lender is saying get a guarantor. So then they will take, this NBFC will take guarantee for the mortgage debt. For the mortgage debt. So if you are taking a home loan, they will take your guarantor. Now why will they take your guarantee? You have to pay them some regular amount. Then comes your NBFC non-operative financial holding company. So just from the name, you don't need to learn so much. It is a non-operative holding company. Means they will not have own business. No own business. Instead, it is acting as a supporter to other companies. So it is a non-operative finance company. Basically, is a financial institution through which the promoters will be set up a new bank. So under this holding company, they will set up a new bank. Okay, so before starting a new bank, they make a holding company. That is it. So they can give NBFCs home loans, vehicle loans, personal loan, gold loan, everything can be given. This is also important. Bank and NBFC have explained to you. NBFC cannot issue checks, they cannot issue demand deposit. It's basically current account. You go and remove directly, they can't do. Bank can give. Now, capital structure, capital markets, when we go to see your shares and debentures. See, there are two kinds of shares in India. We know one is equity shares, the other one is preference share. We can have convertible, preference shares can have various types. Convertible can be converted into equity shares. Non-convertible, they cannot be converted. All those things, okay? So this we believe we've always been studying equity and preference, so we have an idea. Okay, moreover, we also done it in your legal aptitude. Then debentures. So debenture is basically debt. Shares are owners of the company. Shareholders are the owners of the company. I think we are almost done with the chapter. That's it. And then from here, I'll tell you which is important. Udyam portal. Registration. Udyam Aadhaar. Okay. So now what is happening? Government for SME, small and medium exchange enterprises, they have made a Udyam portal from which you get a recognition on self-declaration basis that yes, I am doing a business here and this is my business name, etc. You get a Udyam certificate, after which you get protected by government under various schemes. You can become eligible for various government loans, etc. Okay, for the MSME sector. So many companies have got registered as here. Then we can say yeah. This already we have done the MSME thresholds. MSME threshold we've done, important from exam point of view, and with this we've completed the entire chapter. Thank you. Okay, is the concept clear? Yes or no? After this, Yeah, so where is the class? Where is the chapter number one class? So maybe let this end, then we will start. Okay, so don't worry. First, we'll let this complete, and then we will start. Now we'll complete your, few chapters are left. Indian economy. We'll take a 5 minute break, and we will start. Till then, you can complete your other chapters. Clear? Yeah. So once the lecture ends, then everything will be connected, and I will give you the timestamp also. So don't worry. Okay, now we'll start in like 5-10 minutes. We will start your Indian economy chapter. Bye. Okay, so we've completed your, now we'll start your Indian economy. Okay, so let's begin. Hi, so we'll be starting with your chapter called as Indian economy. Now, in Indian economy, there is a lot of factual questions. I will be focusing on something which is important from exam point of view. Okay, so though it is about Indian economy, so they have a lot of facts, but what is important from exam point of view, I will be covering. Okay, so first is, here we talk about the Indian economy, all the statistics from where which sectors are growing. But first we have to understand India is one of the fastest growing companies in the countries in the world. We have three sectors. The entire Indian economy can be divided into three sectors, three important sectors. One is the primary sector, the second is your secondary sector, and third is your tertiary sector. First, we'll understand what comes in your primary sector. Primary means everything that is related to your primary produce, like your agriculture, anything which is related to farming or directly not industrialized. Okay, so farming, mining, fishing, forestry, all these four will come under in the primary sector. Then when we look at the secondary activity, now the secondary is when the second aspect, which is manufacturing. In manufacturing, what happens in the secondary sector where goods are produced, etc. The main performance of the Indian economy is seen in the various sectors such as chemicals, steel, and cement industry. Okay, types of secondary sector industries: craft, processing, heavy industries, etc. And the third is basically the service sector. The tertiary sector is actually the service based sector, which is about services like advisory services, insurance services, banking services, education services, advertising services. So all the service sector comes under the tertiary sector. Okay, now they have given you a few facts, okay, through this entire chapter, that you can read through the facts, but I will talk about what is important. Okay, they've given you in various each sector what is the exact threshold that is holding. Then they give you the various plans, so this you can read up the plan. I will be focusing on something which is important. Okay, that is the, at the end of the chapter there is something which comes repeatedly in the examination. From this chapter, I understand a lot of statistics are there. One, we have to understand the three sectors that are there, and then directly we come to the later part of the chapter, which they talk about balance of payment. Now, what is the balance of payment? Okay, rest in middle, everything we saw is the statistics, so that cannot be taught, and cannot be learnt also. To be frank, the balance of payment consists that all monetary transactions of at a specified period. The balance of period covers basically your imports and your exports. If the country has received money in net, it is called as credit. If the transactions are company has in the end given, then we had made majority import, so it will be treated as a debit. Understand? Balance of payment means what? In simple, if I tell you, it is your imports and exports. While when we import the goods, we have to pay money, so it is a debit. When we make an export, we receive the foreign currency, so it is a credit. Okay, very simple. So this they call as trade balance is when X minus M. So basically exports minus import is a trade balance. Okay. Now capital account, current account we've already done, but we'll be talking about favorable balance of trade. Okay, so when we say a positive balance of payment, it is when the imports or exports are greater than the imports. Very simple. It's a favorable, positive or favorable balance of payments. Non-favorable or negative is when we have imported more than exported. Now, when we look at the favorable variant, when it is excess of exports, okay, where there is an excess of exports over import. So exports are greater than imports, it's a favorable balance. Unfavorable is basically when the imports are greater than exports. Okay, so unfavorable. Okay, then we come to other important part of the chapter, that is three very important people, which is FDI, second is FPI, and third is FII. Okay, three: foreign direct investments, foreign portfolio investment, foreign financial institution. Now, foreign direct investments from here, which is the best for the country? Best answer is it is the FDI. So foreign direct investment is basically an investment for long term. Okay, where the foreign investment made for long term, it is a foreign direct investment. Foreign FII, foreign institutional investment, this is an institution investing, institution. Okay, here they invest for, their main objective is to make profit. So their entire objective is to buy at low and sell at high. So they just want to come invest in the market. When it is high, they will sell it and they will leave. So they don't really help the country, they just pump in money, then whenever they want to leave. So they don't have a long term mindset in the beginning. Foreign portfolio investor is where an investor is there, individual investor, okay? Individual investor is there. This was an institution investing, like a proper registered institution, not a person. FPI could be a person, individual investor who is investing in the market, and they also have a similar idea of buy at low and sell at high. Okay, so they invest max 10%, not beyond that. Max 10%, not beyond that. Foreign direct investment, okay, they invest into the long term all the foreign and foreign currency, because RBI is the regulator of foreign currency. So they are all regulated by RBI and FEMA laws. Okay. So these are non-residents, obviously, okay, who are investing in all of India. Okay, they can have a flexible entry and exit date. Like FDI, they stay for long term. Here they might have a short term view of profit and leave. FII are institutions. They are proper institutions that are buying and stick, like an institution, like a foreign mutual fund is investing in India. Okay, hedge funds. So these are the institutions that are investing. Now, FII and NEV is an individual human being. No, it is hedge funds, foreign mutual funds, for sovereign funds, pension funds, asset management companies, etc. That is why called as foreign institution investing. Okay, so we've done this. The biggest difference is this is long term, this is short term. Their investment is only about making money and leave. They give funds. Whereas in FDI, it is like Starbucks and, we could say, Starbucks and Tatas. They have a long term relationship. McDonald's, when they come here, they invest. They stay for a long period of time. They give their knowledge, technology transfer, strategies, know how, everything they do. FDI, they increase the GDP. Okay, etc. Now, FDI and FII, there is an investor who is investing. Okay, and this is again for short term. This is for long term. Then overview of the MSME. This I guarantee you, they have asked it so many times and shown it so many times. I can give in writing, it is going to come in the exam. Okay, it was a short MCQ from this chapter as well. The new classification of MSME. So this is the threshold which we have also put it up here. So you can please take a screenshot This is surely going to come. 110% in my opinion, it will come. So the new limit we need to know. Okay, enterprise, micro, small, medium, and this is the new enterprise. Here. So if you are investing in, this is the threshold you have to remember for plant and machine, and this is the turnover limit. This is for turnover. This is for plant and machinery, and this is for turnover. Clear? That is it. With this, we've completed the entire chapter. All that is important from exam point of view. Rest all are statistics which you can take a quick overview through. Thank you. Okay. Now it's time to start with the next chapter. Now it's time to start with the next chapter, which is your business environment. Now in business environment, we start with the entrepreneurship scenario. Entrepreneurship scenario. Okay, so we'll take a 5-minute break and we will start. So we take a 5-minute break and then we come back and we start with entrepreneurship scenario. Do like the video, share it with your friends. Okay, so now we'll be starting with the second last chapter, that is entrepreneurship scenario. Okay, can you see my screen? Entrepreneurship scenario. Okay, okay, okay. In the chat box, are you ready? We'll start and complete this chapter also. Wait, what? Yeah. Let me know in the chat box if I'm audible and visible so we can quickly start and complete. We've completed now. Now we'll do entrepreneurship scenario. And then we'll do your business environment also. Okay, so let's start. Good to go? Yes or no? In the chat box. Let's begin. Hi, so we'll be starting with a chapter called as entrepreneurship scenario. First of all, what is the meaning of an entrepreneurship? An entrepreneur is a person who finds a business opportunity and innovates and make a new business model. Okay. Now there are various types of entrepreneurs. The first one is innovative entrepreneur. Is that who is able to create a new business idea, new business model, and new business, new product services, innovative, which is not there earlier. Then we come to Chinese entrepreneurs. Chinese entrepreneurs are very experts in imitating products. What do? They do reverse engineering. Once moment Apple launches a phone, USA launches a phone, or any innovative product is there, they immediately do reverse engineering and then replicate the successful business model. Then come Fabian entrepreneurs are basically the reluctant to adopt new ideas, okay, and prefer to wait for development. They act when there is an urgent need of survival. So only when it is absolutely needed for survival, then only they will innovate. Otherwise, they will not do any changes. Then we come to drone entrepreneurs. Drone, just remember the word dumb. They are dumb entrepreneurs. They want to stick to the old model. They don't want to do anything new. Okay, they are conservative individuals who want to stick to the old thing, do not want to innovate, and they show no interest in leadership, even if there is business losses. So their business is drowning, but they are not changing. They are called as dumb or drone entrepreneurs. Then we come to social entrepreneurs. Social entrepreneurs solve a social problem. They bring a social change which helps people uplift the poverty, or maybe they would, and something with respect to climate change, any green energy, green products, they all fall under social entrepreneurs. Then we look at agricultural entrepreneur, or someone who is entrepreneur in agricultural activities. Trading entrepreneur is one who buys and sells the goods. That's a trader. Okay. Or they focus on buying finished goods from manufacturers and then sell them to the customers directly. They trade basically. Manufacturing is those who product. So basically, we know the meaning of traders, manufacturers. That's exactly that is there. Women entrepreneurs are those ladies who own at least 51% of the company. Then we can call that as a women-based company, or women entrepreneurs. Innovators and challenger entrepreneurs. They innovator entrepreneurs such as research and development create new products through their creativity. So they focus on inventors are basically creators. Then lifetime entrepreneurs, basically these lifestyle entrepreneurs make some lifestyle changes, often running family businesses that are heavily dependent on personal skills. Lifetimer entrepreneurs. Okay. So these lifestyle entrepreneurs treat businesses as an essential part of their life, often running family businesses, heavily determined on personal skills. Okay, so when we look at this types of entrepreneurs, innovative, Fabian, drone, social trading, women, and lifetime changing entrepreneurs. Then we see the types of entrepreneurship. So very simple from the name itself. From here, the most important is social entrepreneurship, who bring in a innovative solution to a social problem. Then we have small. Then we have a startup which can scale into a bigger business, and then we have big corporates. Okay. Then comes stages of a business model, stages at entrepreneurial level. So first is market research, then developing a first is the R&D, then you develop the model. Okay, then you make a minimum viable product, and then it is the final launch. Okay, market testing. Functions of an entrepreneur: he takes risk, innovates, is a catalyst for Indian the economy, the country's development. They overcome the resistance to change. Okay, they launch the product, and then harvesting is the final earning the money. Okay. Now we look at most important part, which I feel can come, is the government initiatives to foster entrepreneurship, to encourage entrepreneurship. What is the government doing? So Make in India scheme, Stand Up India scheme, Startup and Skill India scheme, extremely important. Okay, rest also we know, always we know liberalization, privatization, globalization. To liberalize, simplify the rules. Privatize means from government we give it to private sector, and globalize means we make the businesses go global and even allow foreign companies to come here. But what government has done is extremely important. So let's see each one. Okay, so those schemes are there. One is Make in India scheme. It was launched by Narendra Modi in 2014. Okay, it transformed India into a manufacturing hub. Okay, and the many sectors were covered where the government is telling foreigners that you come and develop in India. So foreign direct investment, we made it easy that you can come and develop in India, auto, chemical, IT, etc. We raised 49% in 2019 to receipt of FDI, that we said that most of the sectors we have allowed 100% FDI, that the foreigners can come and invest. And this comes in the Ministry of Commerce and Industry. Then we have your Stand Up India scheme. Stand Up means what? We are telling women, now pay attention, this is extremely important. Okay, extremely important. First is stand up. Who we are telling stand up? Women, SC/ST, stand up. We give a loan up till 10 lakhs to 1 crore. 10 lakhs to 1 crore loan is given. Okay, and it is only given for new projects, that is greenfield projects. Okay, greenfield means what? Brand new, first time funding. Brownfield is basically when a second round of funding is coming. Loan here in this scheme is given only for first time, when you're getting the funding for the first time. Now women entrepreneurs, when they come, 51% should be held by women. Okay, if it is a company, then 51% should be held by the women. Okay, now women. And what are the bottlenecks? Bottlenecks basically are the issues which we will see. Just before that, a few more schemes I want to take you through. Okay, which is important from exam point of view. Skill India scheme, very important. So you can mark this as important. Make in India scheme, I've told you. Then Stand Up India scheme, 1 crore, 10 lakhs to 1 crore, women and SC/ST, they get the loan. Then comes your Startup India scheme. Startup India is basically they give that when you are starting up patents, basically, let's see where's the word patents given. Okay, startups, yeah, 80% rebate on patent cost. So in Startup India scheme, 80% discount on patent cost. So basically, we are telling business owners and startups that when they innovate, they will register their technology or product. So for that, they have to pay it patent fees. That 80% discount is given to them. Government also gives them tax benefits. Tax benefits for 3 years post incorporation. It will be a tax holiday or no tax. Registration, smooth registration will be done. A single meeting the registration can be done. They get priority in government tenders, so whenever a startup is there, government tenders will first give to startups. Then comes huge networking opportunities. Government will host two festivals, okay, two startup fest annually. Okay, then this we've already done the new thresholds. Now from here, the other important thing which I want to take you through, skill India we've done. So this is also important, where in order to develop the skills of people, skills, okay, this is also important, skills, they made a national skill development corporation. So you must have seen so many times, the either the government does it themselves or they do a PPP project, public private partnership. With the private sector, they come and they give various skill training. Now skill training would mean, even for the lower level, that is called as vocational training, like how to drive, how to cook food, how to do the basic small little work. All of that is also covered. Just telling you what is important more. One more is important, which is, yeah, pre-departure orientation training. Market is important. Pre-departure orientation training. Now what happens? Pre-departure means what? From India, many for blue collar jobs they go abroad. Blue collar means what? Some physical work, lower end works, they go abroad. So obviously this comes under the Ministry of External Affairs, because the people will go outside India. Now, when Indians go outside India for the blue collar jobs like construction workers, etc., migrant workers, when they go, they face problem of language and culture. They face problem of language and culture. They don't understand how abroad the culture is there, how to speak their language. So there is a pre-departure training that is given by the government. Okay, they will have a training. They will be trained on how to speak, what is the culture like, what is the do's and don'ts abroad. That is it. Important. Technical training, etc., will also be given. And then when we come to bottlenecks in growth, so bottlenecks mean what are the issues in entrepreneurial growth? Why can't you grow? You don't have that. Time management is very difficult. Lack of money. Too much of people telling too much of ideas. Networking. You don't have a big network. Skills shortages. So people are not very skilled, so they cannot do it themselves. And then policy uncertainty. Sometimes the policies keep changing. So with this, we've completed the entire important aspects of the chapter as well. Okay, that's it. Now we'll just take a 5-minute break and then we will start with the next chapter, that is lesson number 7. Thank you. Hi. So we'll be starting with your lesson 7, which is your business environment. Now, in business environment, we are trying to understand what is the concept. So basically, the environment means the surrounding. It means the surroundings. So a business, when they are planning to start, they always analyze their surroundings. What is the competition? Where is the crowd? Where I should be placed? So I will get bigger number of footfalls and demands. Not only where, that is the location, they also study the audience. Basically, what is their purchasing power, what is their demands, what is their needs, what would not work, because the same business model cannot work throughout the country. Even McDonald's has different burgers for different regions. Do you know that? To match the taste buds of the people of that country. Okay, so that is a business environment. It helps us in, so once we scan the business environment, it's very important so that we can make proper decisions. Strategic decisions and planning and long term planning can only be done if you understand your business environment. Okay, now when we look at various factors, they are called as pestle analysis. It's called as a pestle or pest analysis. Sir, what is a pest analysis? I look at the political scenario, I look at the environmental scenario, whether it is a whether I will have, what is the environment, whether it is a sensitive zone, etc. I will look at the social factors, the thinking, the spending, the age groups, everything. I'll look at the technological factors. I'll look at the laws. What are the laws in some countries? Some things are banned. In other areas, it is allowed. Okay, so that is important. Then again, we could say E is for environment and other factors will be seen. Okay, so technological, political, legal, demographic is an important word to understand the quality and the characteristics of the population. Okay, competitive factors, social factors, global factors, all these factors will be seen. Now, in the business environment, there are two important things. One is, environment could be internal environment and the other one could be an external environment. Now, internal environment is in my control, my employees, my vision, my vision, my values. So, the value, the principles, and the ethics that you will be wanting to follow is your values. So, that is decided by you. Okay, then your vision and mission comes here. Vision and mission will come under your business environment. How is the surrounding in your business is determined by me. The organizational structure, so what kind of a structure I want, whether it should be centrally controlled by one person or I want to have different departments for different things. So that structure, BOD, below that manager, all of that will be done. Technology, etc. All this is in my control. When I talk about external environment, as we saw, political, economic of the country. So even if I'm planning to set up a business in a country, I look at the economy of that country, whether it is in recession, etc. Laws of that country, environmental factors, technological factors, all of that will be seen. Now, in your surroundings, you also have micro factors and macro. Micro is in your control. I can call up my employee, I can call up my customer, I can call up my supplier, I can call up my customer, competitors. You can't call up, but they are in close contact of you. Okay, close contact, media. So they are immediate surrounding of the business. So they are refers to the immediate surrounding of the business. Macro factors are something which is beyond my factor, like economy, RBI policy, okay, international issues, they are not in my control. Okay, then so this is it. Then we see the business environment. You have to study your full surrounding of your business, as we've seen. Importance for decision making, it is important. Factors, everything. Pest analysis is done to understand. Okay, then comes types of business environment. Internal, these are the internal things. This is in your direct control. Then comes external. This is outside of the business. Okay, legal environment, etc. Then we look at The micro environment. Okay, so micro refers to anything that may affect the day-to-day operations of the business, so which are directly more closer to the business. A little far off is the macro factors. Now, one thing that I wanted to take you through, the ease of doing business. Now, the business environment, you also look at, if I'm starting a business in any country, I'll look at the ease of business ratings. Ease of business ratings is to be seen. Now, ease of business rating is already given by a international body for all countries. Okay, so they look at various factors. So 10 key factors are looked before giving the rating. Okay, like how fast we get the licenses, how fast is construction licenses given. So 10 important factors are there. Okay, how quick we can get electricity, how much electricity is supplied, markings, how many taxes are there, how easy it is to deal with other countries from that place, how fast we can get our registered. So around 10 aspect, how fast we can resolve contracts, how easy it is to enforce a contract, means enter into contracts, 1 2 3 4 5 6 7 8 9 10. So 10, these are the 10 factors which decide the ease of doing business. Very important. Now we will look at India's rank. This is important from MCQ point of view. Okay, very important. That from the 14th rank in by 2022, now India stands at the 10th rank of doing ease of doing business. So India stands at 10th position. So this is important from MCQ point of view. So the Department for Promotion of Industry and Trade, okay, is spearheading this exercise of making things and the business regulatory environment easy. Okay, that is it, I guess. With this, we've completed the entire chapter. Nice. Okay. Now, we'll just take a 2-minute break before we start with the next chapter. So this won't even take 5 minutes. We'll cover the next chapter in 2 minutes. Okay, 2 minutes dot. We will start with the last chapter of the day as well. Okay. Okay, so we'll be starting with your chapter key governmental institutions. Okay, so let's begin. Hi, so we'll be starting with lesson 8, your key governmental institutions. Now, it's a beautiful, beautiful, easy little chapter that we'll be doing. They talk about key institutions. One of them is Niti Aayog, then you have your SEBI, RBI, and a few others which we'll all discuss along the way. The first we start off is with Niti Aayog. So, what is Niti Aayog? They are called as a think tank of the government. Earlier, they are the think tank. Earlier, we had the Planning Commission. The Planning Commission was replaced, and now we have the Niti Aayog. Okay. Now, what is the full form of Niti Aayog? It is a national institution of transforming India. Okay. It's a long-term strategic plan to ensure that we succeed and prosper in all the key sectors such as health, education, agriculture, and energy. Now let's look at the objectives of Niti Aayog. So Niti Aayog wants that both we have a shared vision of all the states and the center participation. We want cooperative federalism. Cooperative federalism means what? Federalism is multiple states, everyone, but everyone cooperative and discuss with each other, and then we pass laws. Okay. We want from village level to national level, we want industrial growth. Okay, economic policies, etc. And we want that India should have a knowledge and best practices to be followed. Now, when we look at the key functions of Niti Aayog, so they design the policies for growth. Okay, they foster cooperative federalism. So federalism is where multiple states and governments, there central government and multiple states, all of them cooperate in a peaceful manner, monitoring the entire projects, and they are the think tank and the knowledge hub of India. Okay, they are based on 7 pillars of effective governance. Means Niti Aayog is based on 7 governance principles. Like we'll be work for the people, we'll be more active, participate, empower everyone, include everyone, treat everyone equally, and maintain proper transparency. Okay, they've also made a project Sathi. Now it is a sustainable action for transforming human capital and education. So we are trying to make that we not only help the human sector, the human development, alongside we also ensure that we have technological systems in place. Okay, to build as a role model for states for school education sector. After elaborate process in various states, so few states were chosen. So we want a proper action plan for transforming our people right from the school level. Okay, so it's targeting students, train the trainer program is there. Okay, rewards will be given, scholarships will be given, etc. So this was the first institution that we did, Niti Aayog. Then we look at MCA, Ministry of Corporate Affairs. Directly company secretaries are mostly connected with MCA, because today any company is registered, they have to be registered with MCA. Okay, Ministry of Corporate Affairs. It oversees all our professional bodies, also CA, CS, CMA. It is there, and they have some dedicated more authorities inside. That is CFO, Serious Fraud Investigation Office. So under Ministry of Corporate Affairs, they have CFO. So any serious frauds are there, it will be checked. Then we have the CCI. Whenever there is an issue with respect to competition in India, so whenever we feel that competition is being affected or any big player is harassing a small player, then the CCI will take action. That is the Competition Commission of India. Then we have the Indian Institute of Corporate Affairs. Okay, so all these 3 institutions are important. Indian Institute of Corporate Affairs, what do? They have various modules for all professionals. CA, CS, CMA can go. They even have independent directorship training there. They have IBC training there. So it is basically a training center. Okay, training center for professionals. So this is about MCA. Then we come to your next important body, which is your SEBI. Security Exchange Board of India. Sir, what is Securities Exchange Board of India? Stock market regulator. So for your stock markets, there is one regulator which is called as SEBI. Any company which is getting listed on BSE, NSE is regulated by SEBI laws. So the act is SEBI Act 1992. It is headquartered in Mumbai. Okay. And the objective of SEBI is to protect the interest of investors. So when you know Harshad Mehta scam, SEBI was the one who arrested Harshad Mehta. Ketan Parekh and various other scams are uncovered by SEBI. Then we look at the functions of SEBI. One is to protect the investors. Second is to develop and regulate the securities market. We want that our regulatory market should be at number one position. Powers of SEBI. Now when we look at the various powers of SEBI, SEBI has rule making powers, SEBI has deciding powers, judicial, and SEBI has executive, police powers. Everything with respect to security markets. So quasi judicial means judiciary, what does it do? Courts decide cases. Quasi legislative means they can make the laws. So partly judicial, partly legislative, partly executive. So all the powers they have. Okay. With respect to securities market. Quasi means a part judiciary, part functioning of the parliament, part functioning of the police, all SEBI can do. Only when it is related to security markets. Then we come to our RBI. Now RBI, we are doing it from many years. We know RBI is the Bankers Bank. It has been established in 1935 and we have the RBI Act as well. Okay, it was nationalized in 1949. It is a central bank of India. They control. What is the main function of RBI? It is the controlling the monetary policy in India, monetary supply, how much money supply will be there in India. They are the custodian of foreign exchange. It means all the for dollars, etc. are all regulated by RBI. Okay, they print the notes. Development role, they have to develop the financial market. They will decide how the payments will be made. So any kind of online payment, etc. has to be as per RBI law. Any kind of bank has to be registered with RBI. Payment portal are all registered by RBI. So they make the payment and gateway settlement is done by RBI. Then we come to another important body, which is your IBBI. That is, IBBI is your how you have a regulator for security markets. Here they are the regulators for insolvency matters. So whenever a company could not pay loan, IBBI will come into play. So it was set up on 1st October 2016 under the IBC code 2016. So insolvency matters. Insolvency means whenever someone could not pay money, etc. So then IBBI will be there. IBBI have made various bodies. Let's talk about under IBBI you have insolvency professionals. So CA, CS, CMA. We can act after giving a few exams as insolvency professionals. So when a company is getting liquidated, when a company has shut down, or when a company could not repay the loan, so how do we act as turnaround strategist? A loss-making company, the law does not want to shut down companies. They will try that, see if we can revive it, see if we can make it into profit making again. So insolvency professionals. Then they have certain insolvency professional agencies, that is your ICSI, ICAI, etc., who launches these professionals. So they are insolvency professional agencies, like all agencies in which the examination will be conducted. And they also have information utilities. Information utilities keeps information about the daters. Any like for example, Vijay Mallya left the country, nobody knew only. So now they made a information utility that they will track whenever there is a default. The record will be maintained of the corporate data. Okay, so very important. Then we come to your company codes. In India, there are company codes. They are called as National Company Law Tribunal. NCLT. So National Company Law Tribunal is set up under section 408 of the Companies Act. Okay. Now if any person is unhappy with the decision of NCLT, means any company matter today, we see if there is any dispute or any issue with any companies, it will go to NCLT, National Company Law Tribunal. If you are unhappy with the decision of NCLT, you can go to NCLAT, National Company Law Appellate Tribunal. And if you are unhappy with NCLAT, you can go to the Supreme Court. Concept clear? Yes. Okay. With this, we have covered the entire chapter and all your 8 chapters of your economics have been completed, and economics and business environment has been completed in this marathon. Thank you so much, guys. Do like the video, share it with your friends, put up your lovely comments, means a lot, and do join the WhatsApp group for upcoming marathons, revision lectures and updates. Take care, guys. Bye.